Minister a little bit later at 2 p.m. local time, 9 a.m. Eastern, about 30 minutes away from the opening band. You're going to hear from the Prime Minister. JP Morgan numbers minutes away from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Elon Musk warns SpaceX cannot help carry the cost of high-speed broadband internet for Ukraine indefinitely. This comes after an earlier dispute over his public comments, suggesting the government in Kyiv cede territory in exchange for peace with Russia. Musk says the Starlink terminals deployed in Ukraine are using data as much as 100 times the amount of typical households. A week ago, he tweeted that Starlink in Ukraine had cost SpaceX $80 million. And Twitter's lawyers tried again to learn what Musk had told federal authorities who were investigating his attempt to take the social media company private. According to a letter unsealed in court, attorneys for Twitter sought documents last week related to the Musk investigation. By that point, Musk reversed himself on walking away from the $44 billion takeover, but he and Twitter were still adversaries in court. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Wall Street earnings begin right now with JP Morgan, and it's a beat on investment banking with the numbers for 3Q. Let's get to Shanali Basak. Hey, Shanali.
John, you're looking at fixed income trading revenues that blew through Wall Street's estimates. That's very good news for Jamie Dimon and his traders that just got promoted over at that bank. Equities, however, is light. Remember, we do have Morgan Stanley coming up soon as well. The question is this JP Morgan's one quarter being lighter than analyst estimates, or are we going to see this follow through in Morgan Stanley and Goldman Sachs next week?
Can you reconcile these numbers with the commentary that's come out of the C-suite over at this bank?
I can, because this is at the end of the third quarter. Things have gotten worse since then. So I think the forward-looking commentary is going to be very important here on whether these numbers can be maintained in fixed income trading in particular. Now, again, we're going to want to take a look at what those provisions for credit losses look like. So far, headlines crossing the wire say they're at $1.5 billion worth of provisions. That means they're a little bit higher than what Wall Street had initially estimated, what analysts were expecting. Here's the thing. Provisions this quarter can tick higher in future quarters if they think that the economy will get worse. So all that commentary that Jamie Dimon may have and Jeremy Barnum may have about whether this is kind of it based on their calculations of where the next year is headed or whether those provisions can get worse.
Is this partly also giving lip service to the fact that they haven't passed on that much in terms of higher interest to their savings accounts, to their deposits, and they've kept a much bigger proportion of the net interest income given how much yields have risen?
It's such a tough spot to be in because lawmakers were asking them this just a couple of weeks ago. Why aren't consumers seeing higher savings rates? Credit card loans have been rising throughout the year, so they are lending still, yet they're also accumulating money. So they're in a rock and a hard place with that because lawmakers are asking for it, but they are still hoarding cash, Lisa.
What do you make of this headline? They hope to resume buybacks early next year.
So that's a big deal, right? Because remember, there was a lot of concern about the buybacks with JP Morgan, especially given all of that concern that Jamie Dimon has laid out about where they are in terms of capital positioning in the face of higher capital requirements that he calls really arbitrary based on rules that are kind of made out of thin air. I mean, that's the best way to describe how Jamie Dimon is describing these regulations. And it's why you see in equal parts, the bankers talking to investors this week and also down in Washington all week talking to lawmakers on the side of all of this.
Stock's up about 1.8% in the pre-market. Shanali, stay there because I know you're going to look at Wells Fargo numbers for us as well. Gerard Cassidy alongside us today from RBC. Gerard, you've had a couple of minutes to look at these numbers. Your thoughts, please.
Sure, and John, what's really interesting, and we saw this with a few others that already reported, the net interest revenue numbers are really strong for this company as well as its peers. It gets back to that net interest margin when you and I were just talking about. So the spreads are doing very well, and that's what's really supporting the higher level of provisions. They came in slightly above expectations, but that's this loan loss reserve buildup that, based on this new accounting, the banks are doing this quarter. But what this shows you is the banks can handle the buildup in reserves because the margins are coming in better than expected due to the rise in short-term interest rates.
How much do you sort of understand their fears of the future, as we've heard from JP Morgan reiterating his concern about the next couple of quarters? How well can these banks withstand it and continue with some of the profits and perhaps show that their valuations are a little bit under where they ought to be?
It's really interesting because the fear going into next year, of course, is that there could be a real steep downturn and credit costs could come in much higher than people are expecting. However, what this quarter is showing us is that the banks can handle the higher credit costs because of these spreads. So as we go into the fourth quarter and next year, even if the economy really does slow down, as Jamie Dimon is indicating, we think that based upon the core businesses of commercial banking, these banks are going to be able to handle these higher credit costs because of these wider spreads.
We're looking right now, shares are continuing to climb, up now more than 2% as people digest these earnings. Gerard, how much are you looking at the banking side of things and the weakness that we've seen in equities, the strength for the time being in investment banking with respect to JP Morgan's results, but still this feeling that deals are slowing and are going to continue to slow?
That is the real critical part today with the banks. The traditional banking businesses of taking in cheap core deposits, not having to pay up for those deposits, and making loans is the business that is working today. The investment banking and trading businesses, as you pointed out, have been weak all year. With the uncertainties in the marketplace, we cannot count on them really being very strong in the fourth quarter or going into the early part of next year. So the banks that have more traditional businesses of taking deposits and making loans are going to do quite well. The regional banks that don't have exposure to the capital markets are the ones that will probably be the leadership in the bank stocks over the next, quarter or two.
Gerard, hang tight, sit tight. Shanali, what do you make of that headline? The quarter included net investment securities losses of $959 million.
That's a serious number. And you know what? It's not going to be the only one you see. The thing about it, again, we've been talking about it, that's the end of the third quarter. Things have gotten worse since then. I think not only JP Morgan, but especially Morgan Stanley, which is so exposed to Twitter, are going to have to answer questions about how much worse things have gotten since the end of the third quarter and what they'll really have to take in losses. These are mark-to-market losses, so what exactly is going to be on their books?
And how are they going to be transparent about that? You talked about Twitter. Do you expect to have some real sense of what the commitment there is, about what hung bridge loans are on their books, about just in terms of what they're planning to sell and what they're going to hang on to in hopes for a better day? It's
a great question because, Lisa, to your point here, they can't sit there and often name single name clients here, but these are massive deals that everyone in the market already knows about. So how they're going to handle the discussion around this is very interesting. And, frankly, what's also interesting about this is the way that the buy side has stepped up and say, hey, let us take your loans off your books for you.
I'm sure they'd love some of that interest.
For
anyway.
what?
Exactly.
For what price?
Right, for what price?
Gerard Cassidy of RBC Capital Markets. Gerard, just want a final word from you, sir. You've gone over the numbers. You're looking through to the rest of the banks today and into next week. What's your takeaway?
The takeaway, John, is what we were expecting, which was the strength in net interest revenue growth due to the margin expansion is going to be able to cover up higher costs in other parts of the bank. You guys just talked about the write-down of the bridge loans. That number, almost $1 billion, was included in the total revenue numbers, and they still beat on revenue. So the strength of this net interest revenue, which, John, we haven't seen in 15 years, this is really the story for the third quarter. It can handle the higher costs of building up loan loss reserves, possibly weakness in investment banking, and I think that's why the stock is up in pre-market trading today.
Gerard, you're one of the best. Thanks for being with us, sir. Gerard Cassidy there of RBC Capital Markets. Shanali, just a final word on Wows if you can. The takeaway here.
Yeah, they also beat on a lot of metrics, including net interest income. So those higher rates helping Wells Fargo, but they missed on efficiency. Will investors allow that to happen over and over is the question, or is net interest income enough?
Bramo, where are the storm clouds?
Well, Wells Fargo third quarter provision for credit losses. They came in above expectations, $784 million versus the estimated $610.8 million. It's the credit losses, it's the investment losses. What happens if we get to a scenario that people think is the silver lining of the Fed slowing down some of those rate hikes, or perhaps even dropping them in the face of weakness? What does it do then to some of these banks that are getting higher incomes on the net interest margins, but are struggling with what is expected to be higher loan losses and investment losses as well?
Is there a hurricane brewing?
The irony is that Jamie Dimon is saying that there is, and everybody's cheering his results and saying, you just made so much money, yay. So, try to square that one.
I think we're going to try and square that one for the next couple of hours. In the next couple of hours, we'll also talk about US retail sales. We'll go to the UK. We'll hear from Liz Truss, the British Prime Minister. And in just a moment, we'll catch up with Sibaja Rajappa of SocGen from New York. This is Bloomberg.
So is there more pressure when you're trying to win a basketball championship than when you're trying to please investors? Where's the greater pressure?
Oh, I think it's definitely trying to win a championship. It's hard because a lot of, like when you invest, and you know this, when you're investing, You can control a lot more things. When, you know, on a basketball court, you can't control whether somebody's going to make a shot. You've got to get lucky.
And what's the greater pleasure, making 5 times your money on a distressed debt investment or winning the NBA championship?
They're both fabulous. I wish I could do one each year. That would be great. But I think there's a great feeling in being right on an investment that you've done a tremendous amount of work and you've made money for your clients, which I think is great. I think winning a championship it's a very surreal feeling because there's a whole city or state that is actually behind you. You know, we had 70,000 people at the finals, and we had them all outside. You had 17,000 in the stands, and then literally like 60,000 people outside. And when we won, like just the joy that you had brought to the city was phenomenal.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leanie Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Fiscal and monetary policy appeared to be moving in completely opposite directions.
The Bank of England is having to try and manage the chaos that the government has been creating in the bond market.
The bond market vigilantes are back.
What we've had in the UK really is symptomatic of what is happening elsewhere.
For the Fed, they're strapping themselves in for this. They're sort of expecting some increase in volatility because the world is uncertain.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio right here in New York City alongside Lisa Abramowitz. I'm Jonathan Farrow. Shanali Basak standing by for earnings on Wall Street. We'll get into JP Morgan in just a moment. Bramo retail sales coming up a little bit later, and we've still got to process the price action of yesterday.
Especially given the strength that we're seeing in certain components of the population amid the weakness that you're seeing in others just because of inflation. A messy.
Messy's the word of the week.
I mean, it's the word of the year. I was looking through some of the CPI components. You know what the biggest one was?
Shelter?
Nope. I mean, yes, shelter is the biggest one, but outside of shelter, it was childcare costs, and those rose the most going back to 1982. Talk about specific corners of pain as people try to figure out how to live in an inflationary regime.
It's services versus goods.
Yes.
One's fading and the other one is getting really sticky.
And it doesn't seem to be slowing down. The sticky aspects of this inflation persistent, which raises a question, okay, well, how do we then game out what happens next year? And we heard from the banks that it's going to get really ugly, and they're doing just fine right now. And squaring that message is going to be increasingly difficult at a time when they're making incredible profits and they are not passing along those interest costs to the savers.
Can I do word of the week and word of the year and apply it to the UK?
Please.
What a mess. So you're going to hear from the Prime Minister a little bit later this afternoon, 2 p.m. local time, so 9 a.m. here in New York City. There are rumours, reports, the Times suggesting the Chancellor's about to get sacked. We've been reporting for the last 12 hours we're going to get some form of U-turn. I'm trying to work out what kind of U-turn we're going to get. The Bank of England, Governor Bailey was the villain a couple of days ago. He said you've got 3 days, and now he's some kind of hero. You've still got this all to play out. You've still got a Bank of England rate decision at the start of November, and you've got QT set to kick in at the end of this month.
You're the expert in UK politics.
I don't know about that.
And I am very much not. But as I hear all of this, can they do anything other than to announce today a full rollback of everything proposed and say, we are going to spend more time to unleash something that is cohesive, well thought out, comprehensive. Until then, we're not going to make major changes. Can they do anything except for that without having to walk it back yet again a week later?
The drama set to play out in the UK, and we'll bring you some of that drama a little bit later. Right now, no drama in this equity market. Futures up 0.4% on the S&P 500. Tons of drama in the bond market in the last 24 hours. At the moment, yields in the UK aggressively lower, down by 25 basis points. Yesterday in the US, aggressively higher. The 2-year briefly through 350 on a 2-year, 450 rather. Right now on a 10-year, about 389.12 on a 10-year. Yields are lower by about 5 basis points. Bramo, JP Morgan behind us. More banks still to come.
Yeah, and JP Morgan shares flying up now nearly 2.5% in pre-market trading after reporting better than expected earnings on those interest margins that really compensate for a lot of the losses in other places. They did also beat in fixed income. We also heard from Wells Fargo, those shares up more than 2% in pre-market trading. Morgan Stanley up in about a half an hour, and then in about an hour's time, Citigroup. How do they parse out the fear of what's to come with what is going on right now, which is profits? And that is going to be a political discussion as well as one that perhaps can give some guidance as to where we are in this economic cycle. At 8:30 a.m., we get retail sales. Interesting to see how that breaks down, considering some of the weakness that we've seen in certain areas, but the resilience in the CPI. People are still willing to spend. And then the University of Michigan October Sentiment Index at 10 a.m. I can feel John sighing, being like, I hate looking at this thing. But I am curious if we start to see... I know you're absolutely out of the building at 9:59 a.m. But I am curious about whether we do get some sort of deterioration here simply because gasoline prices are starting to rise again, in addition to all of the gloom and doom that you hear from everyone. And I know I could be part of the problem there. Also, we get a slew of Fed speak today. And John, I hear that you're actually interested in it today, which is, I guess, a new one considering how much Fed speak.
Commentary.
So we get Kansas City Fed President Esther George, Fed Governor Lisa Cook, and Fed Governor Chris Waller. How do they spin this at a time when people are ratcheting up their expectations for what the Fed has to do with rate hikes, given that the terminal rate now priced into the market is 4.9% of March of next year?
Getting closer to 5%. We were told a hurricane was coming. It's not even raining on JP Morgan this morning. The stock is up by 2.4%. We're going to catch up with Shanali through the app. But Shanali, I just wanted to cross over to you just briefly. The takeaway from these numbers from JP Morgan, what's the number one talking point for you and the team right now?
He just raised his net interest income expectations by $3.5 billion. Where is the regulatory concern there, is what I want to know. Deposits have slowed to only 3%. And so is there more wiggle room here to them lending at a greater rate in the face of a worse economic environment?
And the buybacks are set to come back, potentially set to resume early next year. We'll be back to Shanali later on. What's left this hour? How many more bank earnings have we got?
Well, I mean, it depends if you include 8 a.m., but we've got two.
Two?
Yes.
Two more still to come.
Yeah,
Goldman next week?
Yep.
Okay. Subhadra Japa joins us, Nash. Can't wait. Head of US rate strategy at SocGen. Subhadra, I want to start with the rate story. And can we start with that 2-year yesterday? Through 450. Briefly, really powerful move. Subhadra, have you rethought just where this Fed funds is going to peak next year?
The market's saying that it's going to peak at 5%, but it's really hard to know for sure, right? Because it's been extraordinarily volatile. I'd say anywhere between 4.5% to 5% makes sense, which is what they told us in the summary of economic projections. But it really depends on the trajectory for inflation going forward. If we do continue to see persistent inflation and also persistent underlying strength in the economy, especially the job market's extraordinarily resilient. We're going to get retail sales today. I think we're going to, the consumer is also pretty resilient. So under the circumstances, the Fed's going to keep continuing to raise rates aggressively till they see the need to slow down. I don't think that's this year.
Subhadra, a lot of people earlier this year were getting bullish on longer-term rates. There seems to be a bit of a rethink of that of late, not only because of where inflation has come in, but internationally, the contagion effects of the entire world unraveling, zero-rate policies that have been in place for more than a decade. Has that been true for you as well? Are you changing how high you expect yields to be able to ultimately go on the long end because of what we saw in the UK about the potential of selling from international investors?
I think the U.S. is in a very different spot than the U.K., right? You have a situation in the U.K. where I'd call it a crisis of confidence. You're seeing this massive rise in long-end yields, and then all the issues with U.K. pensions and margin calls. The U.S. is positioned very differently from that perspective. You know, broadly speaking, the 10-year or the long end of the U.S. curve tends to see very good demand from pension funds, U.S. as well as globally, Japanese lifers and the like. And also, it tends to be a safe haven asset. With the front end pegged to Fed expectations, you're going to see a decent amount of demand for the long end if we start seeing perhaps a meaningful slowdown in U.S. as well as global growth. So we have a very different dynamic in the U.S. relative to everywhere else in the world. And that's why we see a scenario where if global bond yields continue to rise, I think treasuries are going to actually continue to outperform relative to bonds and gilts. And what you're going to see is a narrowing of that spread between, say, bonds and treasuries as the sell-off continues.
That said, I'm curious about the effects of certain exogenous events and what that means for investors in Japan, for example, in the UK, places that might sell what they can, not what they want to, and what they can sell is treasuries. How much are we going to get the ripple effects of that for a longer period of time, creating disruption in the world's ostensibly most liquid market?
That's a very good question, because yesterday we saw what we believe is some sort of an intervention coming from Japan, and the yen kind of depreciated after the CPI number when the dollar appreciated, and then we saw this sort of quick reversal. So we believe that that's some sort of intervention coming from Japan. But you also see that from other global central banks, India, South Korea. There's also evidence from other central banks trying to intervene in the FX markets. Yes, there's some selling of treasuries, but it's really very, very small. It's not going to have sort of a meaningful impact in the treasury market to cause yields to rise meaningfully. I think if anything, all of the selling that you're seeing is leading to poor liquidity in the bond market. You're seeing more choppy price action. You're seeing tailed auctions. The Fed's not actively buying treasuries here. So, again, that's contributing to the poor liquidity conditions, if anything, in the bond market.
I always think it's harsh when a CEO gets fired and the stock rallies. And I wonder how much of that dynamic will still play out in the UK today. As we're reporting over at ITV News joining the Times of London that Kwasi Kwarteng will be removed as Chancellor. Subhadra, is that move sufficient for you to say that the issues that we've had in the gilt market will be over? A U-turn from the government today, a new Chancellor. Is that enough?
I don't think so. I think that it's very easy to sort of destroy credibility. I think it's a lot harder to build credibility back. So the Truss administration is going to have to work towards building credibility back. This might be the first step of many that they're going to have to take, but it's not an easy task from here on. And whoever else replaces Kwasi Kwarteng is going to have just as hard of a job going forward. And this doesn't make it easy for the Bank of England either. So you really need to see all of these three, the government as well as the Bank of England, work closely to sort of restore confidence, if you will, in the gilt markets.
Subhadra, wonderful to get your thoughts on all of this. As always, thank you. Subhadra Japa there of SocGen. Subhadra's thoughts on the gilt market, much, much harder to rebuild credibility. Very easy to lose it.
Well, and you're seeing that right now. I mean, right now the pound is declining versus the dollar, even on this news. So it's not exactly a reprieve for a political regime that has seen incredible tumult. There is a question of what it will take for them to restore credibility and whether there will be, as you mentioned earlier, a premium, the risk premium built into the pound for a longer period of time as a result of this.
There's some scars left on sterling assets after the last month. We'll find out how deep they are. We'll catch up with Guy Johnson over in London in just a moment. A little bit later in the next hour, Jim Paulson, a chief investment strategist at Luthold Group. Looking forward to that conversation. We are up on the week. I checked this morning. Just about up on the week. It's been crazy. I think if you ask people to guess, they'd have no idea.
Well, I think that rightly
just
so.
All over the place. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Bloomberg has learned Liz Truss plans to hold a press conference today announcing plans to reverse parts of her economic strategy. The U-turn follows weeks of market pressure to explain how she'll pay for her program Attention has focused in recent days on whether trusts will cancel plans to freeze corporation tax next year. Instead of raising it as previously planned, the pound erased losses against the euro. Meanwhile, The Times is reporting UK Chancellor Kwasi Kwarteng is, quote, being sacked in preparation for Truss's economic policy reversal. It is not yet clear who will replace Kwarteng. Downing Street is not commenting at this time. Germany's defense minister says NATO allies must take Russian threats to use nuclear weapons in its war on Ukraine seriously, but should not let them disrupt international efforts to support the government in Kyiv. Russian President Vladimir Putin has warned that any nation that interfered in his invasion of Ukraine would suffer, quote, consequences that you've never experienced in your history. His comments widely seen as threatening a nuclear strike. Chinese censors have taken the extreme step of restricting the search term Beijing on social media. The move comes after a rare public denouncement of President Xi Jinping. Photos and videos of two banners criticizing Xi and his strict COVID-0 policy are circulating on social media. The protest comes days before Xi outlines his vision for China at the Communist Party Congress, at which he's expected to secure a president-defying third term. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Apple has identified its next big business, bringing advertisements to more parts of your iPhone. Today, Apple pushes ads in 3 places: the App Store, Apple News, and the Stocks app. In the News and Stocks apps, Apple shows display advertisements. That means that third-party companies like car dealerships or mortgage lenders can showcase their advertisements just like they can on a website. On the App Store, the situation is different. There, Apple has search ads. This allows developers to buy their way into showing up higher on search results. For instance, an App Store developer can bid for the term car racing or basketball so their apps would surface above competing apps in the list of results. Apple's push into ads is a little ironic, given that its ATT, or App Tracking Transparency Privacy feature, limits the ability for Meta, Snap, and even smaller developers to generate as much revenue as possible from advertising. That's because the feature allows users to choose if they want their data collected and tracked across third-party apps and websites. Still, Apple's hoping to expand its own ads business and is planning to add search ads to its Maps app. Other areas where ads could eventually appear are on Apple Books and Apple Podcasts, along, maybe one day, with an ad-supported tier of Apple TV Plus to compete with new offerings from Netflix and other streaming video providers. I'm Mark Gurman. This is Power On.
When U.S. inflation numbers are released,
The score is inflation one, Fed nothing today.
Bloomberg brings you crucial data at terminal speed.
Core CPI in America, 40-year high.
Yields are absolutely flying.
Equities down and down hard.
It's ugly.
And instant expert analysis.
What is the makeup of this inflation?
We are watching the underlying fundamentals.
Will they go 100 basis points?
The downshift just keeps getting pushed out. Now it looks like we're going into extra innings.
Nobody covers the economy like Bloomberg, your global business authority.
All eyes on the UK over the last couple of weeks. That conversation will continue a little bit later. We're looking for a news conference potentially from the Prime Minister Liz Truss at 2 p.m. local time. That's 9 a.m. in New York City. Lisa, potentially a news conference, could be a statement. We don't know because we had no confirmation at all. All we've got is reports. The Chancellor could be on his way out, could be getting sacked according to the ITV News station over in the UK, and of course to the Times newspaper. What happens next? I've got no idea.
Yeah, the Treasury Department over in the UK is not responding to a request for any kind of response to this. There is, however, a response in markets. There is an expectation that they have to do something and something dramatic. Just what it has to be in order to restore confidence is really unclear.
Bank earnings pouring out through this morning. We heard from JP Morgan a little bit earlier. Shanali, I'd love to get your thoughts on this. The stock's up by 2.5%. We've done a lot of the good news. Let's talk about the credit provisions. The provisions for credit losses, how much bigger than expected were they?
Listen, at $1.5 billion, they expected $1.2 billion across the bank. And remember, the reason this is not too big of a deal to the market is because they're also growing loans and net interest income. Net interest income for the year of more than $3.5 billion higher, excluding markets, is significant. So a couple $100 million more, really, of provisions will come as loans grow.
How important is it in some of the earnings calls, as I'm sure you'll be listening in on them later this morning, where they give some sense of how much more there is in terms of some of these investment losses, especially with the likes of the Twitter deal outstanding and many other deals where they've promised to provide financing?
What's interesting is Davide Cicilizio of Bloomberg News has reported that it's going to be about $500 million worth of losses. But the thing is, if spreads really blow out a little more, it could get a lot more. I've heard estimates as high as $1.5 billion across the street. And again, Morgan Stanley was lead left on that one. I think there's a lot of questions here about the cost of doing business. If you're going to win a deal, are you going to be earning fees that are above those losses as you consider future deals? That's going to be the key question as we head into a choppier market.
Davide would have been proud of that. You know he would. JP Morgan up in the pre-market by a little more than 2%. Gilts are rallying, yields are lower. Guy Johnson in London joins us now for more. Guy, you tell me, what's the next couple of hours look like over at number 10?
Some sort of statement or potentially questions being taken. I wouldn't want to be answering questions if I was Theresa May. So we'll see whether or not it is just a statement, what is contained within that statement. As you suggested, John, a couple of sources now speculating that Kwasi Kwarteng, the Chancellor, could go. Who will replace him? I suspect that that Liz Truss is looking at a cast of characters. She is going to be looking for somebody stable. She's going to be looking for somebody, as somebody pointed it out to me earlier on today, that is going to engage brain before mouth, that is going to be basically giving a sense of stability to this government from an economic point of view. But what this government tries to achieve, John, and it's going to be really interesting to hear what Liz Truss talks about here, is what is the objective now? This was meant to be a tax-cutting, supply-side reform government. That's gone. Now what?
I love this, John. Engage brain before mouth. I think I need to.
And we're pretty blunt in the UK.
Yeah, I like that.
And straightforward.
Well, and I like that. And Guy, there is an issue as they try to form what comes next of how much they have to do. Do they just scrap the entire thing and have a carte blanche to begin again? Or do they have to really come out with something that seems cohesive, even though it's clear that perhaps this came rather quickly?
Yeah. There will be nothing cohesive. There will be nothing well thought out. There is no plan, Lisa. Plan A is gone. Plan B, I don't know what Plan B looks like, but Plan B is basically just going to be muddled through. All of the kind of plans that they put in place. So there is no kind of dash for growth anymore. that's gone. So what replaces it? Are we not looking for growth anymore? No tax cuts, no supply side reform, no planning reform, no immigration. All of these things are off the table now. And you wonder whether the UK economy is just going to limp through for another couple of years. Can the UK economy afford that?
But
really?
Guy, can you talk a little bit about the visuals of Kwasi Kwarteng being at the IMF and having this discussion? The IMF has been vocal about what they think about this fiscal plan. And the IMF and central bankers from around the world really coalesced around Andrew Bailey and seemed to support him and not the Kwasi Kwarteng budget or the Liz Truss budget. How much does that play into what's transpiring now?
I think it's hugely important. And it's not just those officials that are there as well. Lots of private sector people are there. They're all going to be piling the pressure on as well. This was a potentially inflationary budget at a time when inflation seems to be something of a problem. You bring up the Bank of England, which I think is kind of, we need to talk a bit more about this as well. Maybe credibility is enhanced for Andrew Bailey, but on the other hand, he's still left with a series of, I would say, substantial problems. I don't know whether or not we're going to see stability on Monday morning in the gilt market. There are some suggestions. Is it logical at this point to proceed with QT when you've just so recently been supporting the long end of the gilt market? Is that logical? Do we need a statement from the governor as well come Monday morning that they are going to postpone, I don't know for how long, QT, particularly at the long end? And is that compatible with still raising rates to fight inflation? It's a mess.
Well, Guy, you mentioned it, particularly at the long end. I wonder if the opportunity is available for the governor to really clarify what part of the curve QT would be more operational, something that Steve Major suggested in the FT earlier this week. Has the Bank of England talked about that, Guy, discussed that at all?
Not that I'm aware of. Maybe the discussion is happening behind closed doors. The Bank of England is unlike Number 10 Downing Street, is a fairly tightly sealed operation. So I don't know is the answer to the question. But it does seem it does seem a little illogical to have done what you've just done, and in some ways to be supporting the pension industry via an ongoing repo operation, to then be effectively selling long-dated gilts back into the market. Maybe you do effectively kind of twist it the other way, and you end up, you could sell front end, and there's also going to be more demand for front end as well at this point. So that may, to Stephen's point, so maybe that works more logically. But I don't think the Bank of England's kind of out of the woods here by any stretch of the imagination.
Guy, we've got about 30 seconds. I often forget who the Prime Minister is. We've had so many over the last few years. We might get a new Chancellor, so let's talk about it. Just briefly, what are the names? Do we go back to Chancellor Javid? What are we going back to?
So if I was looking at a list, I would look at former Chief Secretary to the Treasuries. So to the Treasury. I would think about some of the names, Barclay, for instance, those kinds of names. If you think about Mr. Hammond as Chancellor, you need that kind of grey figure right now. That maybe I'm being very unfair to Philip, but you need that kind of accountant's approach to this, and accountants are going to hate me for this as well. But you need that kind of, as I said earlier, engage brain before mouth kind of.
Just keep offending everyone, Guy.
Yeah, well, I'm doing a pretty good job so far.
Guy Johnson, thank you, sir, out of London. I know where Guy's going with that. You need someone who's been around in Westminster for a long time with some credibility, because they need some credibility fast.
And they need somebody who knows how to communicate with some consistency and doesn't do. I don't think we can call it a U-turn. I mean, do you call it a U-turn when you've turned and then turned?
Well, I said, you're standing still.
I don't think it's standing still. I don't think the market would say that it's standing
started,
still.
Aren't you?
It's switchbacks. Have you ever been in San Francisco to the switchbacks?
Unchanged. Isn't that what Chancellor Kwarteng said? We haven't changed our position. And I said, well, if you do a U-turn twice, you haven't changed your position, have you?
But you've used up some gas and possibly wrecked some parts of the car.
From New York, this is Bloomberg.
get stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Live from New York City this morning. Good morning to you. The price action shaping up as follows on the S&P 500, on the Nasdaq, after a vicious reversal yesterday. I'll get my words out. Vicious reversal yesterday. In the equity market, futures up 1/3%. Distracted by some news out of the BBC just moments ago that Kwarteng is out as the Chancellor. Kwasi Kwarteng is no longer the Chancellor. The BBC understands it comes amid speculation that Liz Truss will today announce a U-turn on parts of the mini-budget. So that's ITV, that's the BBC, that's the Times of London, all saying, Lisa, the same thing, that this Chancellor is out.
So is this how they want to message it? Is this how they wish that they could get some sort of communication to markets, to the population? We erase this guy back from the IMF.
To tell him he's sacked.
To tell him he's sacked. And we want someone who has, a brain before.
Guy said we need an accountant, and someone reminded me on Twitter that Liz Truss is an accountant.
That's not probably very helpful.
So I'm not sure if we need that kind of accountant. I want to run through the bond market price action too for you. 2s, 10s and 30s in America, and then we're going to get to the Morgan Stanley numbers, which have just dropped. Your 2-year, 442.40 on a 2-year. Yields coming about 4 basis points. JP Morgan out a little bit earlier. Shanali Basak, Morgan Stanley out right now.
We are seeing fixed income trading here miss expectations. We are seeing equities come in also a little below expectations, but more than what you saw over at JP Morgan. So you're seeing them keep their lead in that business. Listen, top line, you don't see this much from Morgan Stanley, but they did miss slightly on the top line, on total revenue for the bank. Of course, weakness in that trading business does not help, John. The question here is how they're going to be marking these losses here. I'm trying to parse right through the statement to try to give you a better sense here of what you can expect from those provisioning issues that you're seeing when it comes to that investment banking business. Well, investment banking revenue down 55%.
Wow.
From a year ago.
So just to give you a sense right now, Morgan Stanley shares lower by 0.8% in the immediate knee-jerk reaction to some of these earnings. But this highlights the gap between JP Morgan and Citigroup and Bank of America. And then on the other hand, the Morgan Stanleys and the Goldman Sachs that derive a much bigger proportion of their revenue from the mainstay of investment banking, of deal action, of what's going on with markets. What does this say about perhaps the larger story from that perspective versus the idiosyncratic specific execution stories?
James Gorman, the CEO of Morgan Stanley, likes to think about this as a ballast. When one business is not doing well, the other one will. All of Wall Street had that investment banking ballast for the last couple of years, and that ballast is eroding. It's fading. And so what happens then? So for Morgan Stanley's case, you have net revenue of wealth management. That's their ballast. $6.1 billion. That's in line with expectations. It's rising compared to prior years. It shows you the wealthier clients are holding up a little better in this kind of an environment. But again, there are some serious issues when you think about the future here in the next couple of years of what investment banking looks like. We've talked about it, the cost of doing business here when fees are simply eroding.
Mr. Gorman, continuing to repurchase $2.6 billion worth of shares. What are we learning about capital return programs this morning?
Yeah, Morgan Stanley has been the most attractive this year in terms of their announcements. And again, they've had a lot more flexibility. They're also the richest of the big six banks when it comes to the price to book ratio. So they have a little bit more room on valuation here to fall if there's any bad news than, for example, a JP Morgan, which was actually trading more cheaply. Goldman will be the $1 million question here because Goldman has been flirting with book value or below for the last couple of months, let's say. So is there room here for Goldman to beat, whether it's on trading or other businesses here? Is there something that people will see in the business models that will last them through the cycle a little better or a little worse?
The CEO, Lisa, saying the company continuing to distribute a healthy dividend. The capital return programs at Morgan Stanley ongoing. JP Morgan hopes it's going to resume early next year with buybacks. It doesn't sound like a major hurricane is coming. And I'm not being snarky about it. I'm just saying, look at what the banks are doing with capital returns, still giving money back to investors. It's not like we're falling off a cliff anytime soon based on the way they're behaving.
I'm going to go out on a limb here
Sure.
and suspect that Morgan Stanley and Goldman Sachs CEOs are not going to have the same tone that Jamie Dimon does because they have different incentives. They want to give some confidence that there can be deals that get done, whereas JP Morgan, I'm just going to be a little cynical here, might be more interested in having some of the regulatory oversight removed and the regulatory provisions that are crimping some of their balance sheet expectations, as well as their buyback program, which was crimped by some of the stress tests. So how much is that part of the storm?
Are you suggesting this is a lobbying effort?
I'm just saying it doesn't make sense
dare
based on the on-the-ground action, and I do wonder what the motivation is to talk like that if there isn't the evidence that they can point to right now.
Shanali?
Yeah, can I just, it's interesting. You think that the Main Street problems don't fall over into investment banking, but they do. And you're seeing actually they beat on fixed income trading, and they are more resilient than the next bank we're going to see report in just 20 minutes. It is Citigroup. Are they going to be hurt here a little bit by the currency fluctuations? We're seeing the value at risk rise for JP Morgan to take on some heat in these trading businesses, but the mortgage markdowns. It's an issue. You saw it in Jefferies. Are we going to see it in Citigroup? Is anyone going to talk about it?
We're going to talk about it.
We are.
We're going to force them to. Ken Leon joins us now. He's going to talk about it in just a moment. Ken Leon, the Equity Research Director at CFRA. Ken, it's a tradition to catch up with you on earnings morning on Wall Street. Let's start with JP Morgan and Morgan Stanley. Your thoughts, please.
They're very different banks and in direction and risk. They're very different stories. JP Morgan, so much regulation, capital buffers, they can't buy back stock, and they can't really tell you what recession will mean for the bank. We are seeing cracks in non-net interest income, but if you're a bank analyst, you like really the wave of higher rates, and that really benefited JP Morgan results more than anything for the third quarter. Morgan Stanley, we got a different narrative, and directionally, they don't have a consumer bank, but they're the largest wealth management firm, and they're directionally, James Gorman is looking to them with peers like BlackRock and Charles Schwab. These have higher multiple stocks, and you do have recurring revenue in the stable parts of Morgan Stanley, which is wealth. Investment banking, obviously, is the more cyclical area, and you never get rewarded in the stock price if you have a great quarter. So I think Morgan Stanley has the right course. It just went 0 for 3 in terms of equity and debt underwriting and M&A. They were all down significantly. That was no surprise.
Ken, is wealth management really the ballast that it used to be based on some of the returns that we've seen, with one shop saying that the 60-40 portfolio has seen a 25% peak to trough loss over the past year?
Absolutely, and it's much more dynamic than a static conversation that it's just a bunch of advisors. Morgan Stanley has a largest share in advice giving, but they also, with the E-Trade acquisition, are number 2 behind Fidelity in terms of the 401k or the workplace, and they all have the digital platforms to get the early millennial investors. This is a dynamic area for growth, for wealth, and James Gorman was way ahead of the industry.
I want to get across to Gina Martin-Adams on some of this. She joins us now from Bloomberg Intelligence. Gina, the earnings are starting to pour in, and I have to say that so far, they haven't been that bad. Thinking of Delta, thinking of Domino's, others as well. Take your thoughts on the banks this morning, please.
Yeah, I mean, I think that it's very consistent with your thoughts. It really is about beating very low expectations. Recall banks, as well as the financial sector at large, are expected to be the worst of the worst in the S&P 500, down for a second consecutive quarter. Expectations were down for a double-digit pace of decline for much of this sector for this quarter. That's pretty low expectations and a very easy bar to beat for the most part. So I think that you can extend that argument to much of the S&P 500, frankly. We've gone from a point of expecting 10% earnings growth back in July to now expecting just over 1% earnings growth on the index for the third quarter. And very clearly, we haven't seen quite that degree of a slowdown. So what we've priced in is significantly greater than probably is going to emerge over the next several weeks.
So, Gina, do you think that that's going to be a rallying call? Or do you think that people are going to say, wait a second, we're seeing all of these cracks in real time that haven't filtered through to the bottom line of all these companies yet, and hang tight because the pain is coming?
Yeah. It depends on what the companies say about the outlook, frankly, Lisa. This is such a difficult time to forecast earnings. I mean, really, in the grand scheme of things, what you have are tough comps off of easy comps off of tough comps, right? This all goes back to what happened in 2020, which was an absolute earnings crash. Then you had earnings completely surge in 2021, and now we're coming off of that surge in 2022. So distinguishing how much of this is just comps versus how much of this is a true slowdown in economic activity on trend is really, really challenging. That said, the reason that I think that we want to rely so much on company guidance is because they're the only ones that can really tell us what's likely to happen into 2023. How much of this is just a comparison to extraordinary results a year ago versus a true slowdown in economic activity that they expect to extend is a huge question mark. I think that extends across industries, frankly. Financials is not my area to watch this season because I think that expectations were incredibly low. The area that is much riskier, frankly, going forward is likely to be the tech, the mega cap stocks, some of the consumer discretionary stocks, where expectations are still a little bit high and expectations for growth into 2023 are probably too high.
And Ken, just heading back to you, given that we're going to be hearing from the banks and possibly some of their expectations, perhaps they're not necessarily the main bellwethers this season. What are you looking for in terms of exactly what Shonali and John were talking about, the mortgage losses, what they're talking about with credit provisions, and the expectation for a rockier road?
It's going to happen. There's no question about it. And I think the resilience of the banks is their ability to have the capital buffers and also higher rates will offset some of those concerns. But we haven't, all morning, we haven't talked about exogenous factors, something where it's the punch unexpected, whether it's coming from anywhere in the credit markets or anything related to risk.
Got to leave it there, Sir Ken. Thanks for being with us. Ken Leon is going to join us a little bit later for City earnings. Another news organisation in the UK reporting that the Chancellor is out.
Who is it?
This one's Sky News. Kwasi Kwarteng sacked as Chancellor after the mini-budget turmoil. So I make that Sky. The BBC about 10 minutes ago, we broke that on this programme when that came out. Then it was ITV, and then it was the Times of London before it.
This is kind of a circus. This can't be how they want the communication to go about.
Fantastic insight.
Thank you. I try.
I think that's exactly what this is. I mean, I think
it's
most
messy,
people
and it's a circus.
On board. It's a messy circus.
It's a messy circus.
And they need to clean it up. Yeah. Stephen Stanley's going to join us shortly, the chief economist at Amherst Pierpont, live from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. U.S. House Speaker Nancy Pelosi said in a video shot during the January 6th insurrection that she wanted to punch President Donald Trump if he showed up at the Capitol. Now, video released by CNN shows Pelosi in her office as the Capitol is about to come under assault. In the footage, Pelosi said, quote, "I hope he comes. I'm going to punch him, and I'm going to jail, and I'm going to be happy." Well, lawmakers want to question Trump about the 2021 riot and are demanding documents and testimony about his role. The move comes just weeks ahead of midterm elections that will determine control of Congress. Twitter's lawyers tried again to learn what Elon Musk had told federal authorities who were investigating his attempt to take the social media company private. According to a letter unsealed in court, attorneys for Twitter sought documents last week related to the Musk investigation. Now, by that point, Musk reversed himself on walking away from the $44 billion takeover, but he and Twitter were still adversaries in court. A new Turkish law mandates jail time for what authorities describe as spreading false information on digital platforms. The measure was proposed by the governing AK party and its nationalist ally MHP. Now, people there now face jail terms of up to 3 years if found guilty. Media groups and opposition parties have described the bill as censorship and a move to stifle critics ahead of next year's election. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it.
It's pretty much full service shadow banking with nobody in charge.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Suppose somebody is watching and says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
I don't mind the Fed getting back to normal. I think they ought to, but they said they wanted to not add to uncertainty. They're adding to uncertainty. So what they should do is say, look, this is what we're doing, and we're trying to get back to normal, but then we're going to stop because we don't want to kill the economy for an inflation battle that we're going to win anyway.
Great to catch up with David Kelly yesterday, the Chief Global Strategist at JP Morgan Asset Management, live from New York City this morning. Good morning. Let's start with the price action. In about 43 minutes from now, you'll get U.S. retail sales in America. I believe you get Citi earnings in about 10 minutes too. But we need to focus on the U.K. as well. Sterling breaking through 112, 111.99. We're down a little more than 1% on that currency pair at the moment. So sterling is a whole lot weaker. Can't find a rally right now in the last couple of hours. Gilts can. Yields are lower by about 20 basis points on a UK 10-year to 398, let's call it 399. As the reports continue to pour in, Lisa, that he's out. The Chancellor's going to get the sack. We've heard that from Sky, from BBC, from ITV, from the Times newspaper, and we're still waiting to hear from the Prime Minister, Liz Truss.
This doesn't necessarily engender a whole deal of confidence, so it'll be interesting to see how choppy the trading really is, because unless they can come out with some sort of conclusion or clarity in terms of what they plan to do, and Guy Johnson was saying that is not going to happen, then how do you then give some sense of a direction to a market that is desperately looking for one?
U-turn. How much credibility will you reclaim from the U-turn? My question would be, okay, let's say they go back, they remove the whole thing. Let's go back to the day before it was announced. Does Bank of England pricing return to that day? Or is it still elevated? And that's a real question. And I think it's going to be tough to unwind a lot of the work, the damage that's been done in this market over the last month.
I would agree. I also think that it brings back into focus where we are in terms of it is not just a UK problem. In the meantime, we got a CPI report in the US that was hotter than expected. You had dollar strength. You had this feeling that the Fed would hike more than expected. It has a ripple effect. The world moves, even if they're doing a U-turn and standing in the same place.
Stephen Stanley joins us now, Chief Economist at Amherst Pierpont. Stephen, you expected a U-turn, a pause, a pivot from this Fed anytime soon after that data yesterday?
Good morning, Jonathan. I'm sure they would love to, but no, it's not in the cards. I mean, clearly inflation is becoming more entrenched. The breadth of underlying inflation right now is just very troubling. And I think it's going to be a while until the Fed gets inflation under control, unfortunately.
Stephen, has the data that we got yesterday made you rethink the terminal rate that the Fed would ultimately get to in this cycle?
So my estimate was already above 5%. I think, I'm sticking with that for the moment, but I think there's certainly, some upside risk to that. I definitely think we'll see another 75 basis point move in November. And, I had thought they would slow down to 50 in December, and I'm going to, cling to that for the moment. But certainly, if the inflation numbers over the next couple of months come in the way that the last two have, then it's not clear to me that they can step down from these 75 basis point hikes.
Stephen, what do you make of all of the discussion that perhaps we are overlooking the lag effect in the rent component? The fact that housing does tend to operate on a lag and that there may be a decline in the next 6 months that hasn't yet fed into the data. And so we're going to get it even if the Fed doesn't raise rates as aggressively. What do you say to people who really are arguing that perhaps the Fed is overreacting?
Yeah, well, the research suggests that the lag is from home prices to the shelter cost components of the inflation numbers is about 12 to 18 months. So I think our realistic scenario here is that maybe rent and owner's equivalent rent continue to accelerate until around the middle of next year. And that's a long time for the Fed to sit, to kind of say, trust us, we got this under control. I think the other point would be that if it were only about shelter costs, then that argument would be very powerful. But the reality is that we're seeing inflation very hot and in many cases accelerating across virtually the entire list of categories within the CPI or the PCE deflator. So this isn't, shelter is one story, but it's not the only one. And unfortunately, the data are pointing to a more systemic issue. Wage pressures are pushing into prices now. And I think, the risk is that the Fed has talked about is that the longer inflation is high, the more people get used to it, the more they start to incorporate it into their plans. And that's why the Fed's in a hurry, because they're trying to cut that off before it gets kind of set in stone.
How many times have we sat here, Lisa, and said they've got more work to do? They've got more work to do.
How much are we getting? Are we catching up to the Bill Dudley version of the world that he laid out yesterday? I mean, but we're there in terms of the market expectation. And then you have some people, including Jason Furman, out on Twitter saying that perhaps it's even higher than what the market is currently expecting because of the sticky components that are rising at a really rapid rate.
Stephen Stanley of Amherst Pierpont. Stephen, always wonderful to catch up with you, sir. The rumours in the UK are all over the place, so won't harm to add another one. This comes from Nicholas Watt, the latest reporting from the BBC Newsnight political editor. A group of senior Tories have been holding discussions and have decided the following. The sacking of Kwasi Kwarteng will prompt them to come out publicly next week and call on Liz Truss to resign. My source, quote, these are serious people. The PM will find it difficult to survive. This individual, this reporter in the UK, goes on to say, my source tells me Liz Truss has made a mistake if she thinks her outgoing friend Kwasi Kwarteng has no base in the parliamentary party. People like Kwasi, he's friendly, he's honest, maybe a bit too honest, maybe that's his problem. So this could be the direction of travel. The drama, I think a lot of people assume, does not end today.
And right now, I'm looking at a pound hitting new session lows at 111.74. So this isn't exactly versus the dollar. This isn't exactly creating some confidence in leadership at a time when that's kind of needed.
You've got to work out what comes next, and I've got no idea.
So we're
no idea at all. The only thing I know based on reporting right now is that we're set to hear from the Prime Minister a little bit later this morning. 9 a.m. New York time, which will be 2 p.m. local time. We have understood over the last day or so, based on reportings, they're set to walk back some of this stuff. How much of the U-turn we actually get in this announcement, once again, I'm not sure.
So we're talking about the politics of all of this, and we thought we would be talking about the fact that the bond buying was ending today. So we're not going to have that ballast from the Bank of England come Monday at a time of incredible turmoil, albeit in a different manner than perhaps people had expected.
Crazy time in the UK. Right now, 111.70. On Wall Street, we had numbers from JP Morgan and Morgan Stanley. Citi's going to come up in about 5 minutes' time. Shanali, you've had about an hour, so come on, let's go. Citi next. Can you predict Citi based on what we've heard from JP and Morgan Stanley?
Citi's got a tougher job here because they're so much more global than the other banks here. So we're going to want to look down and see how much that's actually impacting them. I also want to see how they're responding. It's amazing. If you look at Morgan Stanley, they had their compensation costs in line, but their headcount is up. JP Morgan headcount is up almost every major business line. So again, Jamie Dimon is talking about significant headwinds, but they're still investing. Maybe the bankers are not making as much as they were a year ago, but they are still getting jobs.
Morgan Stanley, Lisa, down 2.76% in early trading.
I love that. You've had a half an hour, Shanali. Tell us the future, please.
Isn't this the crystal ball on the table?
This is the crystal ball. We can kind of like put our hands on it and sort of chant. My takeaway is equities underperformed, FIC trading outperformed. And this is interesting to me at a time when we're seeing spreads blow out, where you're starting to see illiquidity in markets. Suddenly banks are acting in the traditional function of trying to make markets.
Do you know what that reminds me of? Do you remember the former president in Saudi Arabia, and they put their hands around that orb? Was it an orb or something?
This reminds me of Star Trek.
I still don't know what that was. What was that?
What's this?
I don't know.
We love it, though.
8:45 Eastern in the next hour. Gita Gopinath, the first Deputy Managing Director of the IMF, sitting down with Tom Keene, coming up.
We anticipate that you will have regulations clarifying what the SEC is going to do on cryptocurrencies and related kinds of things in the near future.
It's pretty clear that many of these tokens may be securities. What we've asked the trading platforms, the lending platforms, the other various venues to come in, to work with us, to get registered under the securities laws, because if a platform has 50 or some of them 500 tokens on their platform, probabilities are they're not all non-securities.
Now, there's another issue that has arisen, which is called gamification, which is to say people are making a game out of trying to buy stocks. Are you worried about this phenomenon?
We live in the 2020s in a new digital age where applications on our phones can use massive amount of data and then predict our behavior. What do we do when the digital algorithms are maximizing for the company's revenues rather than our returns? And so we're trying to think that through. It's not just gamification, it's a little bit more than that. It's whether there's a conflict between the app and our investment returns.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leni Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
The market is focused on one theme: inflation, rising rates, and nothing else.
I think we're just too obsessed with inflation because we haven't seen this beast in 40 years.
Growth has to come down a lot if the Fed is going to contain these inflationary pressures.
You really can't deny that this is a recipe for a recession.
What gets us back to 2% is a firm foot on the brake pedal from the Federal Reserve.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City this morning. Good morning, good morning. What a morning for news. This is Bloomberg Surveillance on TV and radio alongside Lisa Abramowitz. I'm Jonathan Ferro here in New York City alongside Sonali Basak breaking down the Wall Street earnings. Tom Keene down in D.C. He'll be catching up with the IMF's Gita Gopinath a little bit later. This news just drops. According to a person familiar with the matter, Kwasi Kwarteng leaves the UK government. Our reporting here at Bloomberg, the Chancellor, Lisa, is out.
And now the question is, who's next? And we're getting some reporting on who potentially could be the successor. I will get my words out. It is that kind of morning at a time when how do you rebuild the trust in an administration that is really imperiled at this moment?
There is some reporting, I believe, from the Times that maybe Jeremy Hunt, the former Foreign Secretary of the UK a number of years ago, may become the new Chancellor. I believe he was also a backer of Rishi Sunak as well. Is that the direction this government might be going in?
That's the reporting right now. If that's the case, what does that mean for Liz Truss and her survival at the helm of the party? Or is this basically a predecessor to kicking her out and electing someone new? Is this sort of the beginning of more political turmoil next week?
So the Chancellor's out. We understand, based on reporting through the whole of this morning, that we're going to hear from the Prime Minister potentially in the 9 o'clock hour here in New York City. So that is 2 p.m. local time over in the United Kingdom. And we understand, based on reporting of the last 24 hours, Lisa, that there's going to be some form of U-turn on the announcements of a number of Fridays ago. How much of a U-turn there will be, I don't know.
If they don't have details, is the U-turn simply cleaning house? And that seems to be the suggestion by some of the reporting coming out right now.
That's the latest from the UK. Need to get the latest on Wall Street as well. News from Citi. Shanali, the latest bank reporting this morning.
The news is that fixed income trading has fallen below expectations. You have Jane Fraser in the statement addressing the fixed income business high up in the release, saying that it is in line with where they were about a year ago. But remember, this is an extraordinarily competitive business on Wall Street right now, so the miss is not a great sign at a business that she is holding on strong to, trying to build, trying to be competitive with. Equities beat expectations. Investment banking fees have fallen below expectations, but revenue has fallen in line with expectations.
One thing Jane Fraser did as soon as she got into Citi was reconsider where this bank needs to be, what the geographical global footprint is going to be. Citi's winding down all institutional banking services in Russia. We knew we were going in this direction. Shanali, do you think we've reset now enough at Citi that the decisions have been made where Citi wants to be and where it doesn't want to be?
That's a yes. They have gotten out of a lot of businesses, and she has really shrunk this bank in a very significant way in the face of a lot of geopolitical headwinds in a year. So let's take that into consideration. They still have regulatory headwinds, which is why I don't want to say Citigroup is out of the woods. There's a reason they're trading so far below their book value, and those regulatory headwinds are a big part of that, regardless of what's happening across the globe.
What about loan loss provisions at a time when that was very much in focus at JP Morgan? We heard some about that from Wells Fargo. Morgan Stanley was surprisingly light. Where is Citi on that?
Citi is in line with expectations. There's two questions. We started to address it a little earlier. Provisions are going higher because people are reserving more because they're lending more. Is Citigroup's provisions now in line with expectations because their lending appetite is less than JP Morgan's, perhaps? What is their appetite to take on risk in this environment? I think is a critical question we're going to have to hear both the CFO answer when he speaks to journalists a little later this morning, as well as to analysts after that.
Shanali, do you have a sense of how they're pricing risk at a time of real choppy liquidity, at a time when private markets largely are believed to not yet have been marked down in any significant way, leading some of the illiquid assets on their books with some questionable valuations?
The important thing here, Lisa, is that you can take losses if you're also making much more money. And so to the extent they're taking those losses in order to generate more fees, and they're not taking them disproportionate across the business, value at risk in Morgan Stanley and JP Morgan have been ticking higher. Not in every single business, but certainly fixed income, JP Morgan had showed as the biggest share of that risk being taken on. Now, wouldn't you love to see Citadel Securities numbers right now? What the market makers are making in this environment because the banks have other problems on their hands, I think is still a critical question.
So have we had the right kind of volatility? Because they often complain, don't they? If the earnings are bad, it's the wrong kind of volatility. Was this the right kind of vol?
Super important. This is only till the third quarter. Things got so much worse since then. The tone I heard from bankers at the top of the house, end of summer, was pretty sanguine. Now it is a little frenetic, exhausted. They're working late at the top of the house everywhere.
We're down by 2% in early trading for Citi in the pre-market. Ken Leon joins us again from CFRA. Ken, what's with the move down? What stands out for you?
So I think for Citi, it's a multi-year turnaround story. They're still selling consumer banks outside the U.S. It's the most non-U.S. bank of the big six. And going into next year, it's still a transition period. So I think Citi's trading at, really low valuations to the peer group for those reasons. And they do have regulatory risk, that Wells Fargo had, but is improving. So, Citi still has to spend millions to upgrade its regulatory systems.
Ken, how do you strip out execution from just market conditions at a time of incredible volatility and differentiation in terms of the business mix at these different banks?
You need both. And I think that what we haven't spoken about this morning is that the large banks have increased headcount. And yet we've seen in the capital markets that normally by September, October, you're going to be talking up a very healthy pipeline for the fourth quarter. That's not likely to happen this year. And then the hard decisions have to be made whether you need to cut back some staffing in the capital markets, particularly in areas of investment banking.
Ken Leon there of CFRA on the latest from Citi. JP Morgan out a little bit earlier, Morgan Stanley as well. Here's a very classy letter from the now former Chancellor, Kwasi Kwarteng. Dear Prime Minister, you have asked me to stand aside as your Chancellor. I have accepted. Just working through this letter, I just want to get to a couple of paragraphs that are pertinent to the news we'll probably hear later this month when we get the announcement of the budget. It is important now, as we move forward, to emphasise your government's commitment to fiscal discipline. The medium-term fiscal plan is crucial to this end, and I look forward to supporting you and my successor to achieve that from the backbenches. He concludes, Lisa, by saying the following: we have been colleagues and friends for many years. In that time, I have seen your dedication and determination. I believe your vision is the right one. It has been an honour to serve as your first Chancellor. Your success is this country's success, and I wish you well. Whatever you think about the policies announced by this Chancellor in the last few weeks, that is a very classy letter from Kwasi Kwarteng.
And a vote of confidence saying Liz Truss should remain, being your first Chancellor, indicating there will be a second or a third. And this question of basically saying, I still believe in what we're trying to get at. Very classy, also confirming that he is exiting and putting it squarely on Liz Truss as her decision for him to do so.
We can head over to number 10 Downing Street and catch up with Lizzie Burden over in London. Lizzie, the reaction on the ground where you are.
I have to say, John, the other thing that strikes me about that letter is that Kwarteng repeatedly refers to her vision. And remember, Kwarteng is Liz Truss's political soulmate. So getting rid of him would leave many people asking how much is really changing. And that is why the reports from the Times and the Telegraph are that she's going to replace him as Chancellor with Jeremy Hunt. He finished runner-up to Boris Johnson in the 2019 leadership contest. He's previously been Foreign Secretary, Health Secretary, but this would be seen as a sign of Liz Truss reaching out to other parts of her party, which is something she has not done up to now, which is perhaps why she's had such a difficult time getting Trussonomics not just past markets, but through her party.
Lizzie, do you have a sense of why this is happening so quickly? What exactly is going on? I mean, are there people just, running through the halls of Parliament with piles of paper, throwing them up? I mean, what is exactly the mechanics of this morning that has been incredibly messy after an already messy, 48 hours, et cetera?
Well, the irony is that after Kwasi Kwarteng was so flippant about the markets, saying, remember, they'll react as they will, blaming all the pound moves, gilt moves on international factors, it's been the market pressure that pushed for the corporation tax U-turn that we're expecting Truss to announce at the press conference later. The markets, when that news came about yesterday, priced it in, and so we would expect a massive sell-off if they didn't go ahead with it. But now we're expecting even more U-turns to be announced. Got a bit excited there because there was a car pulling up, but I have to tell you it's an empty one. But there's both the financial pressure and also the pressure from the party. You'll remember Michael Gove, very dangerous senior member of the Conservative Party, put the pressure on Liz Truss to U-turn on the top rate of income tax. It became inevitable that Liz Truss's party were not going to let her pass these measures of tax cuts when they're so unfunded through the House of Commons. So the pressure just mounted too much.
Lizzie, let's just finish on this one. And I think it's the next step here that matters to so many people, particularly in the United Kingdom. This party's not doing well in the polls at all. You know that, I know that. Is it enough just to get rid of the Chancellor? When, as you say, in that letter by this Chancellor, these are Liz Truss's policies too. She owns them. Her fingerprints are all over the last month or so. How long can she stay on? And does this party go after her next?
Well, is this enough? First of all, you may also see the sacking of Chris Philp, the Chief Secretary to the Treasury, who we interviewed at Tory Party conference just last week. He was supposedly the brains behind the top rate of income tax cut. You may also see Jacob Rees-Mogg, the Business Secretary, going under the chop because he reportedly disagreed with Truss over the idea of raising benefits in line with earnings instead of inflation. Can Truss survive? Well, you have to ask, what's the point of having this woman in number 10 Downing Street who cannot get her vision for the economy past the markets or her own party? And there are reports that her own party is now looking to take her down as well.
Lizzie, this won't be the final time we catch up with you this morning, that's for sure. Lizzie Burden outside number 10. Chancellor Kwarteng, has been sacked. Coming up a little bit later this morning, Geeta Gopinath of the IMF sitting down with Bloomberg's Tom Keene. TK, no doubt, leading off on the IMF's thoughts on what's taken place in the UK over the last month. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Well, as you've heard, the UK's Kwasi Kwarteng has confirmed he will step down as Chancellor. The Times is reporting Jeremy Hunt is lined to take over after the position. Bloomberg has learned Liz Truss expects to hold a news conference later today pronouncing plans to reverse parts of her economic strategy. Now, that U-turn follows weeks of market pressure to explain how she'll pay for the program. Attention is focused in recent days on whether Truss will cancel plans to freeze corporation tax next year instead of raising it as previously planned. Kroger says it has agreed to buy rival Albertsons in a deal worth an enterprise value of $24.6 billion. It joins the two largest U.S. operators of traditional supermarkets. The companies say investors will receive $34.10 for each share in Albertsons, which includes a special dividend. The companies plan to sell as many as 375 stores through a spinoff. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
To name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
latest inflation numbers are released.
The score is inflation one, Fed nothing today.
Bloomberg brings you crucial data at terminal speed.
Core CPI in America, 40-year high.
Yields are absolutely flying.
Equities down and down hard.
It's ugly.
And instant expert analysis.
What is the makeup of this inflation?
We are watching the underlying fundamentals.
Will they go 100 basis points?
The downshift just keeps getting pushed out. Now it looks like we're going into extra innings.
Nobody covers the economy like Bloomberg, your global business authority.
For the Fed, they're strapping themselves in for this. They're sort of expecting some increase in volatility because the world is uncertain. I don't suspect the folks at the Fed yet see evidence that there's something that's not working in markets to the point where they're worried about it.
Seth Carpenter there, the global chief economist at Morgan Stanley, live from New York City this morning. We are about 12 minutes away from retail sales in America. 24 hours afterwards, we had CPI. 24 hours later, and this market, well, I'm still reeling. We were down 2.4% at one point on the S&P 500. We closed the session up about 2.6%. Futures on the S&P look like this, down about 0.1%. Yields are lower by 6 basis points to 387.89. About 24 hours ago, when we got that print, Lisa, yields were not lower. They were absolutely ripping higher at the front end and right the way through the curve.
This trading type of activity does not give anyone confidence. I think that it's fair to say that given the whipsaw action and the lack of logic behind it, there is not a cohesive theme driving activity. People point to some issues with algorithmic trading. You know, to me, it indicates, though, a jumpiness that makes this market prone to a much bigger move one way or another.
Jim Paulson joins us now, Chief Investment Strategist at Luthold Group. Jim, you've had a day to try and make sense of this. You've had more than 12 hours, so let's go. At one point, this market had given back 50% of the post-pandemic rally, and Jim, and then we just ripped off the bottom yesterday. Jim, what happened?
Well, you know, I don't know either, Jonathan. I would say a few things, though. One is, you know, that bear markets don't generally end under conditions that make a lot of sense. Usually the news is horrifically bad and you feel helpless and there's no solution to the problems you face, and then the market starts going up for no reason whatsoever. That's kind of the case in most of them. Do you think in March 23rd of 2020, when market had dropped, you know, 35% in 23 days, that it all of a sudden took off, that anyone really thought that was it was over? Same thing in March of 09, for example, when it finally took off. It took a long time to convince all of us, perhaps, that maybe it's behind us. So it often takes off when it doesn't make much sense and the news is still horrific. Oftentimes it's when the news is the worst it's been. So it could be that. It's a kind of move on a technical basis that could be the type of thing starting a new bull, or it could just be a dead cat bounce on a very oversold market. You know, very oversold market for the last 5 days, and then it takes a temporary bounce. I don't know either. I would say one other thing. It's somewhat interesting to me that we sit here in the S&P 500 right now. That's the same level it was at the June lows over 4 months ago, and yet think of all the bad stuff that's happened over that period. Multiple massive rate hikes by the Fed, big increase in yields across the curve, a lot of hawkish talk, increased recession fears, increased inflation fears, and yet the market has not gone down. And I think it might say something about how washed out this market is. We've got an S&P 500 down 25% already. That's selling on a trailing multiple lower than 70% of the time since 1990. We've got terrible sentiment on Wall Street, not much better sentiment on Main Street. And we've got a Fed that's orchestrating a monetary policy that just seems clearly unsustainable. It just can't last long.
Okay.
It's going to break something.
Jim, this is where I wanted to go, because I remember the last time you came on and you said that you're bullish partly because the Fed was going to pause and that people are overzealous about their expectations of the Fed funds rate. Have you rethought that at all, given the CPI data that we got yesterday?
Yeah, I mean, they're not going to pause this month. You're exactly right, Lisa, and they look pretty firm through UN going to 4.5. I just think they're going to be forced to, you know, before too long. And that might be what the market is kind of thinking as well, and why it's kind of hanging in there. Let me give one other thing to think about here. You know, the 2 years up, you know, in the last couple of days, the 1 year, and the Fed's going to go ahead and do at least 75, you know, in early November. But look at what's going on with the 5 year, the 10 year, and the 30 year. Those are below where they were before the PPI report came out. So we've got 2 days back to back of horrific inflation reports, and a big part of the curve is no longer responding. What might that imply? It might be that the Fed doesn't blink, but maybe the bond market blinks. In other words, if there's bad inflation reports that charge the Fed to move rates even higher, you might start to escalate a recession fears over inflation fears, and that'll bring bond buyers in. If I get convinced that the Fed's caused a recession, I'm going to start buying bonds at 4% on the 10-year.
You're buying bonds. Do you want to buy stocks when that happens, Jim? That's the question.
Yeah, it is a question. I think you do, Jonathan. But my point is the Fed might be stopped because it can no longer raise rates across most of the curve because they're thinking the policy is going to create a recession, so it brings bond buyers into the place. And that could stop the Fed, too. But I just think the stock market's washed out, and it wasn't, what's interesting, it wasn't only the stock market that blinked yesterday, it was the bond market too, or at least a big chunk of the bond market that said, no, I know the Fed's going to do what it's going to do, but yields are done going up and stock market's done going down. We'll see if that holds, but it's kind of interesting over the last couple of days.
It's so bad they're going to have to hike, and that's going to mean they're going to have to cut because it's so bad. You see where this is going?
Right. I mean,
the dovish market.
Jim, you're killing
more aggressive
me.
they get.
Jim, you're killing me. Come on.
The more aggressive they get, the more you're going to bring recession fear as the primary fear over inflation.
And I want to buy stocks on recession fears before earnings have collapsed, Jim.
Well, let me say, I just recently put this out earlier this week, Jonathan.
Sure.
I looked back to 1948. We've had 12 recessions, and I looked at how much had the market, you know, sort of pre-forecasted a recession coming in the past. The average or the median decline in the stock market prior to the first month of this recession starting was about 5.5% or something. We're down 25%. We're down 5 times more than the average market decline prior to a recession. So there's a lot of bad already booked in this stock market. So we could have a recession, and I'm not so sure the market has to go a lot lower. Now, certainly if it's a deep one in 08 or 2000, certainly it's going lower. But I don't think we're headed for that. We're headed for more of a mild recession, and maybe that's priced in already. And what really matters at this point is if the rate structure stops going up, I think the stock market starts to look a lot better as well.
Jim Polson of Luthold Group. Jim, with a constructive view. Thank you, sir. It's good to catch up. That's the constructive view. The less bearish view on this market right now.
And to be fair to him, as Gina Martin Adams was saying, right now the earnings are coming in less bad than people thought, and perhaps suggesting that there is something else going on, and we've already priced in much worse. The flip side is, if things get bad enough that the Fed has to go more harshly, then ostensibly there will be some economic damage in the meantime that would be a scenario that would be more difficult to digest. So it's sort of a very difficult thing to.
Did you see what Michael Hartnett of Bank of America called this?
What do you call it?
This move yesterday. He said it was a bear hug. Just a hug for the bears.
I felt it.
A bear hug. Coming up, Gita Gopinath, first Deputy Managing Director at the IMF. A hug from the bears for the bulls. Maybe that's what he meant.
I don't think so. Okay. I don't think that they're giving much hugs.
From New York, this is Bloomberg.
jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building.
It's pretty much full service shadow banking with nobody in charge.
US retail sales come out in about 8 seconds' time. Now, if I knew the data and I told it you right now, just whispered it, would you know what to do with it? And could you tell me where the equity market was going to close?
No.
Lisa, could you?
No,
Isn't that the problem?
Not.
Well, I can tell you the numbers are out now, so you decide what to do with it. Mike McKee can break it down. Morning, Mike.
Morning, John. Well, retail sales come in a little bit worse than anticipated. On a headline level, they're flat for the month of September. Last month, they were up by 0.3. The forecast was for a 0.2 gain. Take out autos, and you've got a 1/10 gain compared to a 0.3 decline in the prior month. But the retail sales control group is what we tend to look at, and it is up a healthy 0.4%. You take out autos, gasoline, the things that are counted in other areas of GDP. And so it does look like a reasonably healthy gain of 0.4 compared to flat the prior month. Let me take a quick look here at what moved this month. Gasoline, I think, of course, is likely to be down. Gasoline stations were down 1.4%. That's not as bad as the 5.2% decline the prior month. Looking at motor vehicles down 0.4. So you see gas and motor vehicles really dragging that headline number down. Food stores up 0.4 on the month. Health and personal care stores up 0.5%, as were clothing stores and clothing accessory stores. General merchandise up 0.7. Department stores 1.3%. Non-store retailers declined in August, but they rose 0.5% in the month of September. Food services and drinking places up by 0.5%. So fairly wide range of solid gains in retail sales. And a lot of economists have been pointing to numbers from the major banks showing that people were still had significant deposits from last year's stimulus and were still using credit cards to buy things. So right now, the consumer's hanging in there, probably also a function of the fact that job growth is still strong.
Mike, sit tight. Let's go through these numbers then. Futures basically unchanged on the S&P 500. Bigger bid comes into the bond market. Yields are lower by about 6 or 7 basis points on a 10-year maturity to 388. Lisa, at the front end, we're down about 5 basis points to, let's call it 440, after breaching 450 on a 2-year just yesterday.
That doesn't make sense with respect to retail sales because stronger than expected spending would allow the Fed to go more harshly. What it does make sense with is the import price index that actually declined more than people expected, and this idea that we're getting imports for cheaper in the United States because the dollar is stronger, and that has a disinflationary effect. And I do wonder, John, how much that's going to play into the calculus here in terms of the push-pull of how far the Fed goes.
I couldn't make sense of yesterday. I'm not going to try and make sense of today.
And I'll just...
We can talk about the Federal Reserve.
Yes.
Well, I mean, look, we've both said it in the past, haven't we? You can't define the data based on an intraday move in the market.
No, and I would agree with that. I do think, though, this import price index is somewhat interesting.
Mike McKee joins us again. Mike, I want you to react to this and set things up for November. I'm not sure what's left now. Not really anything at all. Go through what this Fed's going to be sitting on when they next meet.
Well, the one big piece of information that we will have at the end of the month is GDP for the third quarter, the first estimate of that. And right now, it's looking pretty good. The Atlanta Fed had us at 2.7% growth, which is quite a rebound from the 2 quarters of contraction that we had in the first half of the year. So you put it all together, you've got strong job growth, you've got healthy GDP, you've got consumers still spending, and we still have inflation. So it does suggest, as Lisa mentioned, that you probably have to do more if you're the Fed. Now, does that mean a higher terminal rate? Hard to say. Does it mean they may go faster? They're locked in for 75 in November, but then they might do another 75 in December if this keeps up. So two sort of parallel stories come out of this. One is that they may have to do more, and two is that they may be able to get a soft landing out of this if they can get some movement on inflation.
Hey, Mike, good to catch up. Mike McKee there. Breaking down the retail sales number after CPI came out yesterday. We've got to break things down in the UK as well. I guess things are breaking down in the UK. We're hearing from the Times again that Jeremy Hunt will be the UK's Chancellor. Chancellor Kwarteng was sacked a little bit earlier this morning. Jeremy Hunt, the former Foreign Secretary, according to reporting in the UK, will be the UK's Chancellor. We're set to hear from the Prime Minister potentially at 2:30 local time now. That's the latest guidance I'm hearing. 2:30 local time, so about 9:30 in New York. TK, I know over in DC, it's just as busy as it has been for us through this morning.
Let me just say, John, you're just absolutely killing it this morning. I mean, you guys have led with the collation of all of this historic moment for the United Kingdom. I'm sure we'll continue to do that, folks, through the day with Guy Johnson in London. It is an historic IMF meeting as well. Any number of topics to speak to. Gita Gopinath, about the first deputy managing director at the International Monetary Fund. And as I ended yesterday, Gita, with the managing director on the United Kingdom, her meeting with the former chancellor and with the prime minister just a few days ago, I must begin there with you. Your research capability says what is the best first practice for this fractured government in the United Kingdom? What's the best first step for them to get to some form of new stability?
So, Tom, firstly, it's a pleasure to join you here. We are following the developments in the UK, and of course, there are issues which we don't comment on. We do hear that there is some recalibration likely to happen on the policies, but we don't have any details. We'll see what comes next, and then we will be able to comment more on those.
Thank you for those comments, and we'll get much more on that, I'm sure, from the managing director as well. Folks, I've got this up here. This is how quickly things are moving at the International Monetary Fund. Released within the hour is a definitive weekend read on how countries should respond to the strong dollar. Gopinath pulling an all-nighter on this. It's wonderful, and with wonderful charts as well. What I see within your note is you speak of financial amplification leading to instabilities. Can the strong dollar amplify the world's risks of instability?
So, Tom, when you have sizable movements in the dollar, it has very sizable implications for the global economy because it's so dominant in trade and finance. But the important thing to keep in mind is that there are fundamentals that are driving these large movements. They seem very quick, they seem very steep,
the differences in the path of monetary policy. Tightening is one factor. The differences in how energy prices are affecting countries is another factor. So I think this is going to be a bit of a rocky ride for countries, but they will have to adjust to it. So they have to use their own monetary policy tools to be able to keep inflation.
We're going to speak to Shubham Rajan here about emerging markets. Let me stay with the major countries with you, Dr. Gopinath, and let's look at the yen experiment. All of this meeting in the world, John Farrow is transfixed by yen 147. What is the counsel of you and your chief economist to the Japanese to extricate themselves from their unique yield curve control experiment?
I mean, there are fundamental reasons for that particular divergence that we're seeing in the currency. Japan has decided to stay the course in terms of keeping interest rates low, while the Fed has decided to stay the course in terms of raising interest rates very decisively to bring down inflation. And that, of course, is one of the primary drivers of these different, of the fact that the yen has lost value relative to the dollar. Now, of course, over time, monetary policy will have to figure out what the best course is, depending upon inflation developments in Japan. But as of now, I believe, given the diverging trends, you know, currency movements will look like they do now.
With all of your expertise, if Japan capitulates to a more normal monetary policy and yen goes strong, 148, 150, took just as a pick a number out of thin air, 129, what will that do to the Pacific Rim financial system?
We'll have to look into that and see whether it happens in a disruptive manner or it happens in an orderly manner, right? We always have exchange rate movements all the time. When you have big movements in exchange rates, the problems that come up is when you have firms or banks that have borrowed in multiple currencies and haven't sufficiently hedged themselves. So those get affected. But if you've hedged yourself, I mean, these are movements that you should be used to.
Because of breaking news in the United Kingdom, we're going to ask one more question. I really want to give John and Lisa in New York enough time with the flow of news there. I did a careful read of this blog. Folks, again, this blog is the read of the weekend. Look on Twitter. I'll have it out with the IMF's website. Nowhere in here do I see that you were at the Plaza Accord. You don't mention the Plaza Accord. How does a grizzled pro like you respond to the media silliness, the romance back to 1984? How do you respond to people, we need another Plaza Accord?
I think that's not where we are. And frankly, when the Plaza Accord worked at all, it was not just because there were announcements on currencies, but there was more a signaling of coordination of other kinds of fiscal and monetary policies and so on. So no, I don't think we're going to have a Plaza Accord anytime soon.
What have you learned at these meetings? I'm fascinated how people's time frame is back 40 and 50 years, not back 15 years. What has been your observation of these meetings and the tension here?
I think there is a clear recognition that inflation is stubborn, it's persistently high, and I do think central banks are very careful not to again stumble on the fact that maybe this is all going to correct itself automatically. So I think there is very much an agreement on staying the course. The second piece is about making sure monetary policy and fiscal policy are consistent and they're both rowing in the same direction as opposed to pulling in opposite direction. And everybody is concerned with financial fragility in the sense of what could be lying in the dark corners, in the shadows that we aren't aware of at this point.
In different shadows in 2008. Geeta Gopinath, thank you so much for joining Bloomberg today. Dr. Gopinath, the IMF First Deputy Managing Director. In New York, Lisa?
Thank you so much, Tom. Great interview, as always, and fascinating to hear the discussion around the importance of fiscal policy tightening in order to help monetary policy. It's just in response to the turmoil that we're seeing in the leadership at the UK. UK 30-year yields down 4.4% after reaching 5% just days ago. Coming up, we have more from the IMF with our very own Tom Keene. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Tough talk from Nancy Pelosi. In a video shot during the January 6th insurrection, the U.S. House Speaker said she wanted to punch President Trump if he showed up at the Capitol. Video released by CNN shows Pelosi in her office as the Capitol is about to come under assault. In the footage, Pelosi says, quote, "I hope he comes. I'm going to punch him out, and I'm going to jail, and I'm going to be happy." Lawmakers want to question Trump about the 2021 riot and are demanding documents and testimony about his role. The move comes just weeks ahead of midterm elections that will determine control of Congress. Democratic Senator Raphael Warnock and Republican challenger Herschel Walker are deadlocked in the Georgia race. Just 4 weeks before the election, the candidates will face off in their first and only debate in Savannah tonight. Neither has managed a breakout in the pivotal contest. Georgia is a crucial state in the battle for control of the U.S. Senate. Chinese censors have taken the extreme step of restricting the search term Beijing on social media. The move comes after a rare public denouncement of President Xi Jinping. Photos and videos of 2 banners criticizing Xi and his strict COVID-0 policy are circulating on social media. Now, the protest comes days before Xi outlines his vision for China at the Communist Party Congress, at which he's expected to secure a president-defying 3rd term. And Kroger says it has agreed to buy rival Albertsons in a deal worth an enterprise value of $24.6 billion. It joins the 2 largest U.S. operators of traditional supermarkets. The companies say investors will receive $34.10 for each share in Albertsons, which includes a special dividend. Companies plan to sell as many as 375 stores through a spin-off. Global news 24 hours a day on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
So is there more pressure when you're trying to win a basketball championship than when you're trying to please investors? Where's the greater pressure?
Oh, I think it's definitely trying to win a championship. It's hard because a lot of, like when you invest, and you know this, when you're investing, you can control a lot more things. When, you know, on a basketball court, you can't control whether somebody's going to make a shot. You've got to get lucky.
And what's the greater pleasure, making 5 times your money on a distressed debt investment or winning the NBA championship?
They're both fabulous. I wish I could do one each year. That would be great. But I think there's a great feeling in being right on an investment that you've done a tremendous amount of work and you've made money for your clients, which I think is great. I think winning a championship it's a very surreal feeling because there's a whole city or state that is actually behind you. You know, we had 70,000 people at the finals, and we had them all outside. You had 17,000 in the stands, and then literally like 60,000 people outside. And when we won, like just the joy that you had brought to the city was phenomenal.
You do not get stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
The most important task we have to secure our economies is to win the fight against inflation. And that means for central banks to show the resolve that is necessary.
Down at the IMF, Managing Director Kristalina Georgieva speaking yesterday with our own Tom Keene. We're going to head down to Washington, D.C. in just 1 second. We are getting more news, of course, out of 10 Downing Street, the latest coming from Prime Minister Liz Truss, putting out a letter to Kwasi Kwarteng, thanking him for his service. In it, interestingly, she seems to reaffirm her commitment to the energy price guarantee and energy bill relief scheme, which she says will go down as one of the most significant fiscal interventions of modern times. It remains to be seen, and we will see more later today about how much of their plan really has been pulled back in response to market volatility. Let's head back down to Washington, D.C. Tom Keene with a very special guest. Tom.
Lisa, thanks so much. And I believe we have an important press conference in the 9 o'clock hour, New York time, with the Prime Minister. John Farrell will bring you that on television and on radio as well. Right now, in these unusual times, an unusual interview with Raghuram Rajan. He's former governor of the Central Bank of India and far more at the Booth School of Chicago, has provided two magnificent books of the era. He defined the crisis of 08 and 07 with fault lines in The Third Pillar, which was my book of the summer one year. The Third Pillar has been shockingly prescient about the technological and community changes of America, none of which we can talk about this morning, for there is only one topic. The topic is the strong dollar, what it means for all of our Bloomberg surveillance audience, and you, with the great financial sophistication you have, are watching cash in international overnight lines, which are called swap lines, and the nations that don't have those instruments available. Yeah. Tell us your study of liquidity right now.
Well, I think this is a phenomenon which is across the board, and you see it reflected in the problems in the UK right now. What is happening is the central banks flooded the markets with the most liquid asset on earth, which is central bank reserves, tens of trillions during the pandemic. Now they're withdrawing that cash from those markets. So what happens when they withdraw that cash? Banks, in the meantime, have written a lot of claims on that cash. A lot of people depend on that cash for final settlement. That cash is shrinking, and as a result, things are getting very tight in financial markets. If you look at every measure of liquidity, it is off the charts. It's back to the March 2020 levels in the United States. Think of what happened in the UK. You have these pension funds who suddenly have to make margin calls. They need cash, but nobody's willing to lend them that cash. And so what they do, they sell assets. Right. As they sell assets, those assets fall in value, and you see the interest rates go up. I think the problem there was, of course, the government action. But you can think about accidents waiting to happen across the world, including for emerging markets.
So let's split this. Let's talk first about the others like the UK that have so-called swap lines where there's a confidence to go to the Central Bank of the United States. Is that system working now, or do you have a fear that we could fail with the larger, more sophisticated nations?
Well, I think for now, the Federal Reserve has made commitments to a number of countries. It's the countries that are outside that system which have bigger problems, because when they need the cash, what are they going to do? They're going to sell in their stock of treasuries, their reserves, and that creates a price impact in various markets. Right now, I think they're managing.
Right.
But if there is a big sort of demand for cash, as, for example, in the UK, basically you get mass selling.
You and I studied Stanley Fischer 101 in the crises of previous decades, and people here at these meetings make clear they're looking back 40 and 50 years. Is EM different this time? Is EM more prepared for these liquidity crises?
It is more prepared because it has built reserves during the time of easy money. It's seen that story happen again and again. So the big EMs are better prepared. Of course, the small EMs in the developing countries, not so. And for them, of course, the twin effects of higher inflation, higher food prices, that's hurting them a lot, higher fuel and food. And so many of them are on the brink. This time, not so much liquidity, but default. They simply cannot service their debt and help their people at the same time.
Lisa from New York emails in and says, Tom, you've got to ask about yen and the Pacific Rim. Lisa, let's do that. Raghu, very simply here, the Bank of Japan has an original experiment which is not taught by Randall Krosner at Booth. It's original. Weak yen, 1047. I've done the math, you've done the math. X number more interventions possible. At some point that will break, and as I said to Dr. Gopinath, we will see yen go 148 to 129 in a heartbeat. What does that do to Indonesia? What does that do to China?
Well, any volatility in asset prices creates a problem somewhere. Now, in this case, when the yen strengthens significantly, it probably helps other countries a little bit. The problem, to some extent, is of people who have borrowed it and has to move off its yield curve control because it's achieved its inflation objective. How does it move off? It's riding a tiger. It has to move off in small steps. But markets basically accelerate that movement. They know that you have to get off it. And therefore, what happens to JGBs is a big price fall when the Bank of Japan moves off it.
I have time for one more question, unfortunately. They are riding a tiger as the tiger holds their party congress in China literally tomorrow and this week as well. How does China fit into your view of Pacific Rim and around your India, given their absolutely unique COVID strategy?
Well, I think they're hurting themselves. And the question is, how do they move off, given that this is so closely associated with President Xi? And it is creating opportunities for countries around the Pacific. Vietnam is benefiting as a China +1. India is benefiting a little bit. But the real question is, what happens to China after this? How do they find a way to move off this? Or do they actually buy Western vaccines and start vaccinating their population with effective vaccines? That's the big question in front of them because they cannot continue this strategy forever.
Dr. Rajan, thank you so much. Greatly appreciated. The former Reserve Bank of India Governor Raghuram Rajan this morning as well. Lisa, it has been an extraordinary 3 days in Washington.
It really has. Great job, Tom, and thank you for that. It has been an extraordinary day in Washington. It has also been an extraordinary day in the United Kingdom. The latest headline that Jeremy Hunt of the Rishi Sunak era has been named as the new UK Chancellor. This comes after Kwasi Kwarteng exited after just 38 days. That makes him the shortest-serving chancellor to ever leave office alive in almost 200 years, just giving you a sense of the scope. We are seeing a bit of stability, at least a bit in the pound, but still a bit weaker. Meanwhile, in a broader sense, markets have rebounded a little bit ahead of the open. Who knows where they'll be by the end of the day because things tend to swing around. Bond yields lower and actually heading even lower on the heels of some of the recent economic data. Coming up at 9:30 a.m. Eastern, we'll hear from Liz Truss. This is Bloomberg.
make it very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much like the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark. It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio. Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leni Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
I feel like the next hour should be a therapy session for market participants. Live from New York City this morning. Good morning, good morning. Stocks are up. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue. What a messy week.
The CPI print yesterday was bad. It's really bad.
Inflation was supposed to be moderating.
The reality is that we're seeing inflation very hot.
We got a print that is moving in the wrong direction.
We're in a situation here where we thought the Fed had made a one-off adjustment to get to policy rates up to 4.75%.
This is presenting a real challenge for not only the Fed, but the broader economy.
Unfortunately, the data are pointing to a more systemic issue.
It is brutal. I think that's a good way to sum it up.
You know, wage pressures are pushing into prices now.
Now it looks like we're going into extra innings.
I definitely think we'll see another 75 basis point move in November.
Of course, what we're seeing is this repricing in markets.
The question now that we all have to ask ourselves is a 4.75% policy rate, is that enough?
That and how on earth have we rallied, ripped off the lows of yesterday? We'll get to that in just a moment. Mike McKee joined us alongside Kelly Lyons. Mike McKee, the data of the last 24 hours.
Very, very weird, very, very mixed. Inflation obviously still a problem. But this morning, we get word that retail sales were not all that bad. They were flat on a headline basis because auto sales were down just a little bit, and retail or gasoline sales were down just a little bit. But look at the retail control group, up 0.4% for the month. That's basically what goes into GDP, and that was an improvement over the 0.2 gain in the month of August. So retail sales a little bit better, maybe boosted by the back-to-school spending. We don't know what the impact of Hurricane Ian is on these numbers yet, but we'll get a better handle as we get the revisions next month. But the other thing you have to take a look at is that the Fed's job is to clamp down on demand, and yet demand remains strong. Reasonably good retail sales. You look at the Atlanta Fed GDP Now numbers, they're expecting about 2.7% for the third quarter. and payrolls remain strong. So it definitely tells a story that the Fed hasn't done enough yet, or at least what the Fed has done hasn't started to hit the economy. So the question you raised about whether they have a target that's high enough is still a live question.
Mike, in some ways, you've got the easy job. Kaylee Lyons gets the hard job. Kaylee, you've got to explain, after everything Mike's just said, why on earth this market ripped the way it ripped yesterday and followed through in the same way today.
I'm not sure anyone can have a definitive answer to that question, John. There's a number of things you could potentially think about in theory, including just market mechanics, option activity, potentially some short covering. There also is, to Mike's point, about a softish landing, maybe more optimism building if some data is holding in there that the Fed might actually be able to pull this off. Another interesting point I read from Greg Valliere over at AGF was the idea that the inflation data of yesterday was so bad it may mean Republicans do better in the midterms and therefore it's better for financial markets. I don't know which one's right. This market has been incredibly puzzling, and it's not just the equity market either. The bond market has been on quite a wild ride. Today it is that yields are moving lower. We're down about 6 basis points on the 10-year to 387. On the week, we're essentially unchanged in the belly of the curve and in the 10-year. The look at the short end, up 10 basis points on the 2-year, and that has everything to do with the repricing of expectations for the terminal that this market has held underway. Remember back in the beginning of September when we thought it was going to be 4%? We're now 100 basis points north of that. 5% ultimately on Fed funds is what the market is currently pricing in. Then, of course, the question becomes how long they're going to stay there, and if any softness appears in the economy, that will cause them to pivot, which comes back to the health of the consumer and what retail sales data realistically can tell us about it. I just want to issue a warning here that you have to keep in mind the impact of higher prices, and you see this at the corporate level. Pepsi earlier this week, volumes down basically across the board, 1.5% in total. Sales, though, up 16%. It is pricing power, John, going to be very important for this earnings season as well.
Kelly Nice, thank you. Alongside Mike McKee, to the two of you, thank you very much. Futures right now up around 1%. Just keep your eye on some of the headlines coming out of Russia as well. Vladimir Putin in the last couple of minutes. This report, Putin saying that more massive missile strikes against Ukraine, not necessary. More headlines still to come from that, and as they pour in, I'll bring them to you. Futures up again then. We ripped off the lows of yesterday. Zach Griffiths of Credit Sites joins us alongside Dan Suzuki of RB Advisors. And Dan, it's first to you. First up, you know where this is going. What on earth was that yesterday morning through this morning?
You know, I don't have a great answer for you, John, but I think it's a lot of technicals, a lot of algos into an oversold market. So you're bound to get those types of moves, but I wouldn't read too much of those. I think we really won't be talking about that move in a week or two from now.
Jordan Rochester over at Nomura said this morning, he had this quote, if it doesn't smell right, it probably isn't. Zach, is it?
It doesn't smell right, it doesn't feel right, and I think when we've gotten moves like this that didn't make a lot of sense off the back of either an FOMC decision or data like this, it has tended to reverse. And so I think I agree with Dan that this is certainly a huge issue and hard to explain right now, but we won't be talking about it a week from now.
Zach, what if you're wrong? How would you know?
Well, I think that as you kind of get into the end of the week here, sifting through all of the data, the hot inflation print is concerning, but does it really change what the Fed is going to do in the near term? And while the market is pricing a much higher terminal rate, we think that's probably gone a little bit too far. 75 basis points in November seems like a done deal. We think 50 basis points is still the most likely outcome in December and could still see the Fed pausing from there. So I think if we get a little bit more balanced message out of the Fed after a long week of very hawkish messaging, with the exception of Lael Brainerd, I think you could see that take hold and have a more realistic or balanced market reaction.
We'll hear from Governor Waller a little bit later this morning. Later today, the reaction to CPI from the Fed coming up later. Dan, I want to come to you on a big question. It's a debate you've explored within RB and on this program as well. Are we making this secular transition to a regime of higher rates and higher inflation? Because the conversations I have are often dominated by people who believe this period is just an aberration and we return to the old pre-pandemic playbook. I know you and the team have pushed back against that view, Dan. So what's guiding that debate for you and the team internally?
Well, John, I think, you know, we are in the camp that we are in a new paradigm of higher inflation and higher interest rates. You know, the problem for investors, you know, over the next 12 months is that, you know, we're dealing with major, you know, not just one, not two, not three, but four major macro fundamental transitions here. And that's just the first of them. I think, you know, so we're dealing with that transition. At the same time, we're dealing with a major transition in market leadership. You know, the old guard of U.S. large cap growth, we think that that's going away. and we're in the process of transitioning away from that. We're also in the midst of transitioning away from surging profits and abundant liquidity to what's likely going to turn out to be a profits recession with a lot less liquidity. And at the same time, if Zach's right on his view, which we would agree with, on the Fed and interest rates, we think that the drivers of interest rates are going to be shifting here from inflation in the Fed to that of growth over the next 6 to 12 months. So with all those moving parts, it's very likely that it'll feel like over the next 12 months that the story of higher interest rates and a higher inflation was transitory, is temporary, because at the end of the day, inflation's cyclical, interest rates fall alongside that, so they tend to be cyclical. So if growth slows, as we expect it will, this secular story will feel like it's taking a break. But you saw that in the 70s, but they came roaring back as growth came roaring back.
Zach, does any of that resonate with you?
It does, and I think that we are having a shift higher in inflation and interest rates that could persist. And when we think about where we were prior to the pandemic, you had 1.5% to 2% inflation, perhaps 2.5% inflation is the run rate. And when you think about what that means for where the policy rate settles in, if we're able to get to neutral and stay there, perhaps we have more like a 3.5% Fed funds, whereas back in 2018, we got to 2.5% and had to reverse course. So I think there are some shifting dynamics in the market that will persist. But when you look at all-in yields from a corporate credit perspective, things are looking pretty interesting. And when you think about getting through these last 2 months of a very difficult year, looking ahead, things look like there's opportunities out there to get yield in places that had historically been much lower over the past couple of years. So we think things are going to look attractive, and you could even start to see spreads narrow at the end of this year and into early 2023.
So Zach, just help me understand the glide path for growth through next year. You expect spreads to narrow potentially into an economy that's still rolling over?
So we think that you're going to have slow growth below potential, but credit fundamentals are strong, and you're coming into a period where cash flow generation has been strong. Maturities over the next couple of years are reasonable. So while we do expect growth to slow, we're not calling for a recession at this point. And given the relatively sturdy fundamental credit backdrop, we think that results in a spread narrowing. Now, where we could be wrong, I think, is if inflation is even hotter than we expect, the Fed has to tighten more, and we go into a recession, in which case I think spreads narrow. And while you might still be able to eke out decent total returns, excess returns are going to be challenged in that kind of environment.
Zach, you're wondering what's going to happen with market functioning at all? Are you worried about that in any way, shape or form? Because the conversation we've had over the last couple of weeks has been primarily focused around what's happened in the UK. I've asked the question a few times, what are you more surprised by? The announcement from the UK government, or the fact that $45 billion of tax cuts, £45 billion worth of tax cuts, has done this much damage to the market? Zach, I hear a lot about how resilient balance sheets are and how decent fundamentals are. And then I look at the fragility of the system over the last couple of weeks, and I'm scratching my head, Zach, just how resilient is this system?
That's a great point, John, and that's something that we're certainly seeing in the Treasury market as measures of liquidity have gotten much worse as quantitative tightening has picked up. And so it's caused us to wonder, will the Fed have to reverse course on QT the same way the Bank of England did? And we don't expect to hear any big fiscal changes, even if there is a turnover to the Republican side with the midterm election. So it seems like for now, a big shift causing the Fed to stop its QT program or even start buying bonds. We're not expecting that at this point, but it's something that we're looking at as liquidity has worsened. It's even something that Secretary Yellen commented on recently after just a week or two ago, saying she hadn't seen liquidity issues. So it's definitely something that we're focused on, but from the corporate bond market side, we've still priced nearly $1 trillion plus this year. And so there is still liquidity out there. Deals are getting done, but we're going to keep an eye on that going forward.
Dan, it's something I've asked as well. Now, please, Zach brought it up. Is QT still going at the Fed when we kick off 23? Is that something they have to abandon? We've seen what's happened with the Bank of England. We've seen the struggles with the ECB earlier this summer. They had to come up with a mechanism to cap yields on the periphery. Dan, do you think they're still doing QT in 23?
I think they probably will be, but you make a really good point, John. I think, listen, there's this kind of, saying that's going around that everybody's talking about, the Fed's going to keep raising rates and keep tightening until they break something, we're getting closer to that breaking point more likely. I mean, you've already seen sort of a shot across the bow in the UK. If rates do go much higher, or the economy slows much more, or the markets go down more, it's likely that you're going to see more stress in the system, and those signs of stress are going to potentially give the Fed pause. That's not our base case scenario, but the more that we go down this road, the risk of those type of events is certainly increasing. That's the type of thing that would get the Fed to reverse course.
Hey, Dan, Zach, stick with us, won't you? We heard from Mr. Hartnett of Bank of America a little bit earlier this morning. He called it a bear hug. I think a hug from the bears for the bulls, perhaps. This is what he said. In addition, at the big low, which he expects in 23, not this year, everyone expects the Fed to cut. Just ain't the case today. The market is so oversold and investors are so cashed up, it adds up to a decent counter rally, but the ultimate lows ain't seen yet. Michael Hartnett of Bank of America. Futures right now up about 1 full percentage point. Coming up on this program, what are 24 hours for Quarteng?
What I'm totally focused on is on delivering on the mini budget, making sure that we get growth back into our economy. I'm not going anywhere.
Well, he just got sacked. That conversation up next.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. What I'm totally focused on is on delivering on the mini budget, making sure that we get growth back into our economy. I'm not going anywhere.
Well, he is now. That was yesterday. British politics, absolutely brutal. Chancellor Quarteng accepting a request from Prime Minister Liz Truss to step down. A news conference expected in about 15 minutes from now, along with a potential reversal of her economic plan. The team coverage starts right now with Lizzie Burden on number 10 Downing Street and alongside Guy Johnson in London. Lizzie, first to you. Is the Prime Minister next?
Well, interesting comments from Philip Hammond, the former Chancellor, earlier. He was saying that I quote, "I hope the Prime Minister doesn't think the problem can be solved by getting rid of the Chancellor." But he also said that he thinks Truss can survive because he doesn't think that the Tories would want a general election, because as the polls suggest at the moment, it would be total wipeout for the Conservatives and it would be a new era for Labour.
Lizzie, can you guide me through what happens in 14 minutes? Do we get a statement? Is it a news conference? Are there questions? Do we get the reversal of the economic plan? What is next?
we are expecting questions after a statement. The fact that Liz Truss has sacked Kwasi Kwarteng, and we did actually see him leaving number 10 Downing Street in a car earlier, down into the street of where there's an Extinction Rebellion protest, the climate change protesters. We're expecting, because she sacked him, it gives political cover to make big reversals on this mini budget, much further than just the corporation tax cut. And really, she's going to need to do that, since she said she won't cut public spending further if she wants to balance the books and restore market credibility. We may also hear more about the sackings at the Treasury. It's been announced that Chris Philp, the Chief Secretary to the Treasury, is being replaced with Edward Arger. There could be it could be curtains for Jacob Rees-Mogg, the Business Secretary, as well. A bit of a Treasury bloodbath, because really this is the moment where Liz Truss needs to reset her government if she has any hopes to stay in number 10.
And Guy, here was me thinking we'd be talking about Governor Bailey today.
Yep. Well, I don't think his job's completely over yet. We'll see what happens on Monday morning. But certainly the movements in the gilt market does make the governor's job a little bit easier. Will we need to see further announcements from him next week? We will wait and see. Could we see some sort of temporary halt, maybe, John, to the QT program? In some ways, that would be logical. I think we'll wait to hear from Jeremy Hunt. Not entirely sure where Jeremy Hunter is right now, but we'll wait and see what exactly happens in terms of his appointment and what policies he's going to be pursuing. This feels like a coalition. This is like a coalition government now, John. You've got the Truss wing and the Sunak wing effectively in power together in the form of Jeremy Hunt and Liz Truss. It's going to be really interesting to see how ultimately this works and the kind of policies that he's going to bring. He's much more centrist. Will the government allow him to deliver what he wants to deliver? Will the markets accept what he wants to deliver? I think there's a lot of unknowns still here, and that's going to make life a little bit more difficult for the governor of the Bank of England.
Guy, I'm pleased you went to policy at the Bank of England. Of course, the operation is supposed to end today, the gilt market operation announced in the last week or so. What's happening at the end of the month is QT. Steve Major of HSBC wrote in the FT earlier this week that there might be a ways around this, that they can maybe tighten up the maturities that they use to sell, perhaps at the front end, given the average duration of the gilt market is something like 13 to 14 years. Maybe the DMO, the Debt Management Office, can bring that in as well, Guy. Can you go through the options available to both the DMO, the Treasury and the BOE as they go forward from here?
There is certainly more demand at the front end. The UK has extended out its maturity profile quite significantly over the last few years. There is probably more demand at the front end. How the bank would manage that, I think, would remain to be seen. But certainly it seems slightly counterintuitive, doesn't it, to basically support the long end over a limited period of time and then effectively within a matter of days be effectively selling back into that longer duration portion of the market. So maybe we do get some sort of a tweak here in terms of the strategy vis-a-vis the duration that is going to be part of the QT program. Or maybe they just put the whole thing on hold for now and basically focus mainly on raising rates. I don't know yet, but whether or not those two things can be made to be compatible, I think remains to be seen. And I think that's the challenge for the Bank of England at this point.
Hey, Guy, let's catch up soon alongside Lizzie. Lizzie Bird and Guy Johnson. No doubt we'll catch up with them in a few minutes' time because we're set to hear from the Prime Minister in about 10 minutes' time, potentially. Zach Griffiths, Dan Suzuki back with us. Zach, how long does it take to rebuild the credibility that's been lost in the last couple of weeks?
It's been a wild couple weeks, and you have to imagine it's going to take some time. Certainly, they're taking steps that needed to be taken. It'll be interesting to see what actually happens with the policy they put forth. That's certainly going to be key, and the Bank of England dodged a bullet. I was with you, John. I could not believe that Andrew Bailey made those statements earlier this week, but it seems like he's on the winning end so far. Again, we'll see how things go on Monday. I think we're going to still see a lot of volatility from here, and it's really going to come down to how the fiscal policy plans change going forward.
Dan, I want to tie this into the equity market as well and go back to an earlier point of yours. You're thinking about how the leadership might change in equity markets, the next regime of this, and typically the allocation was very, very biased towards the US over the last 10 years. Precisely because that's where the big tech heavyweights were. It was about the breakdown of the weightings of the S&P 500. Dan, as I think about international, if that's part of this new leadership story, perhaps, I'm looking at Europe, which is in a mess. I'm looking at the UK, which is in a mess. And I'm looking at China, which is deep, deep, deep into the unknown. Dan, is the international story part of the new leadership in the next regime?
Yeah, I think it's certainly a part of that story. I think there's a lot of reasons to believe international is going to do phenomenal over the next decade. Certainly it feels bad now, but that's always how it starts. I mean, that's why there's a scarcity of capital in these markets. You go back to the the wake of the tech bubble in the U.S. I mean, U.S. was blowing everybody away. We had just come out of the Asian financial crisis, yet that ushered in the leadership of emerging markets for the next decades, right? So I think you could very much see, what was crisis now, normalizing away over the next 10 years, and that being a big part of the story for international. But it's not just that story. I mean, you have this massive move in currencies, which is unlikely to continue, over the next 10 years. So currency can go from a major headwind, for those markets to a tailwind. At the same time, valuations, which is a terrible timing indicator, but a very powerful predictor of long-term returns, is giving you fire sale prices on most regions outside the U.S. I mean, the rest of the world, trades at like 10 or 11 times earnings. You're hard-pressed to find a market that trades above 12. People are talking about how cheap the U.S. has gotten when it's only back in line, more or less with its historical average. So if valuation is the best predictor of long-term returns, and you also have, this horrible, sentiment toward international, and there's reasons to be optimistic on growth, to be optimistic on currencies, I think that's a recipe for some outperformance in a lot of these regions.
Gents, get some rest. We've got to do this again on Monday. Dan Suzuki, Zach Griffiths, to the both of you, thank you. Equity futures right now up 8 or 0.9%. B of A said it in the last week. Forget 3Q, it's all about guidance for 4Q and beyond. Jamie Dimon at JP Morgan just moments ago, expecting lower investment banking revenue in 4Q versus 3Q. That conversation up a little bit later. Up next, the morning calls. And around the opening bout, the big banks coming out with earnings. That conversation with Baird's David George, Nali Basak on deck with us too. And the view from Julie Beale of Kane Anderson Rudnick. The opening bout up shortly.
Go. After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun. We are joined by UCLA quarterback Chase Griffin, not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
Live from New York, let's get you some morning calls. First up, UBS raising its Netflix price target to $250, expecting its new advertising plan to boost revenue by another 10%. Credit Suisse downgrading Stanley Black & Decker, expecting rising rates to weigh on home sales and housing-related products. And finally, Cowen upgrading Delta, highlighting the airline's improving outlook. That stock is up by 3.5%. Coming up shortly, the opening bow and possibly the Prime Minister of the UK expected to speak at number 10 Downing Street. Live from New York, this is Bloomberg.
thinking big from the beginning. I mean, the reason that I was interested in doing this in the first place was a much bigger challenge than making a comfortable shoe or doing something in the fashion industry as a narrow opportunity. We thought that there was a big leadership opportunity. We looked around at an industry where there was 20 billion pairs of sneakers made every single year, and it was 100% made from plastic and the hides from cows, and it was terrible for the environment. And we thought that we could offer something to consumers that was differentiated in the way it feels, more comfortable, higher performance, and do that because we use sustainable materials. And in doing so, we could take a really interesting leadership opportunity and grab that and use that to tell a totally different story and compete on a totally different vector than what the rest of the industry were doing.
When U.S. inflation numbers are released,
The score is inflation one, Fed nothing today.
Bloomberg brings you crucial data at terminal speed.
Core CPI in America, 40-year high.
Yields are absolutely flying.
Equities down and down hard.
It's ugly.
And instant expert analysis.
What is the makeup of this inflation?
We are watching the underlying fundamentals.
Will they go 100 basis points?
The downshift just keeps getting pushed out. And now it looks like we're going into extra innings.
Nobody covers the economy like Bloomberg, your global business authority. Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
In just a moment, you're going to hear from the British Prime Minister. We'll take that news conference right here live on Bloomberg Television. Going into the opening bell, futures elevated up 0.75% on the S&P 500. On the Nasdaq 100, up 0.9%. We ripped off the lows of yesterday, and we had some more weight back into the S&P and the Nasdaq. There's the opening bell. Switch up the board and get to the bond market. Yesterday, yields absolutely surging at the front end and right the way through the curve. Your 10-year right now, backtracking down 6 basis points to 388. 388.10, call it 388.30. Sterling very much in focus as we wait to hear from the British Prime Minister. 112.31, negative 0.8%. And to round things out for you, crude 87.32. We're down by 2 percentage points. The big banks with earnings this morning: JP Morgan, Wells Fargo, Morgan Stanley, Citi. Not my job to keep up with this. It's Shanali Basak. She joins us now. Hey, Shanali.
A lot to parse through, John, and let's start with some of the biggest topics on Wall Street. Savings rates was one of them. JP Morgan asked right off the bat whether you're going to see higher savings rates for consumers and therefore an impact on their deposit betas. Listen, they said it depends on competitive positioning plus that lag in interest rate rises. So let's see how much those actually go up for consumers. I want to also talk about the areas that Jamie Dimon sees cracks in the market. He says he doesn't necessarily see systemic risks, but he drew some areas of concern, and that includes in the dollar and emerging markets, in credit, and he talked about leverage loans as well, though he said that the market isn't yet to clear, but JP Morgan is not heavily exposed to that market. So that can explain to you a little bit why you didn't see a lot of write-downs in this quarter. You didn't see it from Morgan Stanley, you didn't see it from Citigroup, but the question is, roll forward into the fourth quarter, are they going to take those write-downs moving forward? Now on their securities portfolio, that $1 billion worth of markdowns that you saw is JP Morgan in the market here. They bought some securities, they sold some securities, especially when it came to mortgages. Jamie Dimon has told investors that it's good for them, it's good for their capital return. He's getting questions as well, John, about what future profitability looks like.
Yep.
He said he's going to do damn good in a recession. Let me clarify that for a second. Am I allowed to say that on television?
I think you can. You just did.
Sorry, Julie. And so if we do, what he means by that is they may adjust their 17% return on tangible common equity goal a little bit, but they should be able to reach that goal in the face of all these headwinds that he has consistently outlined.
I understood the sentiment. It was well received. Shanali, we're going to do this all over again on Monday, okay?
We are.
Shanali Basak, thank you. Joining us now, Baird's David George. David, you'll have to bear with me, sir, because in a moment I have to go and hear from the Prime Minister in the UK, and when that starts, we're going to break away from this. But David, first of all, your number one takeaway from this morning, please.
Overall, the results were very good. Net interest income, really the bright spot, and really showing the true leverage of these Fed rate hikes on bank earnings, and it's having a meaningful impact on revenue trends, and we've seen that flow through this morning.
You got a good forward look on the fourth quarter and beyond, David?
Well, on the market side, John, it's obviously a bit unknown, although I think this volatility is actually good for FICC and good for trading so far in October. But there is very positive implications for net interest income in the fourth quarter as banks continue to get that full benefit of these Fed rate tightening.
David George, right on cue, is the Prime Minister of the UK.
My personal experience. I know what it's like to grow up somewhere that isn't feeling the benefits of growth. I saw what that meant, and I'm not prepared to accept that for our country. I want a country where people can get good jobs, new businesses can set up, and families can afford an even better life. That's why, from day one, I've been ambitious for growth. Since the 2008 financial crisis, the potential of this great country has been held back by persistently weak growth. I want to deliver a low-tax, high-wage, high-growth economy. It's what I was elected by my party to do. That mission remains. People across this country rightly want stability. That's why we acted to support businesses and households with their energy costs this winter. It's also the case that global economic conditions are worsening due to the continuation of Putin's appalling war in Ukraine. And on top of this, debt was amassed helping people through the COVID pandemic. But it is clear that parts of our mini-budget went further and faster than markets were expecting. So the way we are delivering our mission right now has to change. We need to act now to reassure the markets of our fiscal discipline. I have therefore decided to keep the increase in corporation tax that was planned by the previous government. This will raise £18 billion per year. It will act as a down payment on our full medium-term fiscal plan, which will be accompanied by a forecast from the independent OBR. We will do whatever is necessary to ensure debt is falling as a share of the economy in the medium term. We will control the size of the state to ensure that taxpayers' money is always well spent. Our public sector will become more efficient to deliver world-class services for the British people. And spending will grow less rapidly than previously planned. I met the former Chancellor earlier today. I was incredibly sorry to lose him. He is a great friend, and he shares my vision to set this country on the path to growth. Today, I have asked Jeremy Hunt to become the new Chancellor. He's one of the most experienced and widely respected government ministers and parliamentarians, and he shares my convictions and ambitions for our country. He will deliver the medium-term fiscal plan at the end of this month. He will see through the support we are providing to help families and businesses, including our energy price guarantee that's protecting people from higher energy bills this winter. And he will drive our mission to go for growth, including taking forward the supply-side reforms that our country needs. We owe it to the next generation to improve our economic performance, to deliver higher wages, new jobs, and better public services, and to ease the burden of debt. I have acted decisively today because my priority is ensuring our country's economic stability. As Prime Minister, I will always act in the national interest. This is always my first consideration. I want to be honest, this is difficult, but we will get through this storm, and we will deliver the strong and sustained growth that can transform the prosperity of our country for generations to come. I'll now take questions. Can I start with Ben Riley-Smith, Telegraph?
Thank you, Prime Minister. Clearly a difficult day. Can you explain to the public why you think you should remain as Prime Minister, given you jumped to key tax cuts that led you to be elected and got rid of your Chancellor?
I'm absolutely determined to see through what I have promised, to deliver a higher growth, more prosperous United Kingdom, to see us through the storm we face. We've already delivered the energy price guarantee, making sure people aren't facing huge bills this winter. But it was right, in the face of the issues that we had, that I acted decisively to ensure that we have economic stability, because that is vitally important to people and businesses right across our country. Harry Cole.
Thank you, Prime Minister. Harry Cole from The Sun. You were the one that wanted to cut the 45p rate. You stood on a platform to win the leadership of the Conservative Party on a platform to cut corporation tax. You and the Chancellor, the ex-Chancellor, designed this budget together, in lockstep, we're told, at times in secret, the two of you. He has to go because of the fallout from it. How come you get to stay?
Well, my priority is making sure we deliver the economic stability that our country needs. That's why I had to take the difficult decisions I've taken today. The mission remains the same. We do need to raise our country's economic growth levels. We do need to deliver for people across the country. We're committed to delivering on the energy price guarantee, which people are already seeing in their bills. But ultimately, we also need to make sure that we have economic stability, and I have to act in the national interest as Prime Minister. Chris Mason, BBC.
Excuse the bluntness, Prime Minister, but given everything that has happened, what credibility do you have to continue governing?
What I've done today is made sure that we have economic stability in this country. Jeremy Hunt, as Chancellor, is somebody who shares my desire for a high-growth, low-tax economy. But we recognise, because of current market issues, we have to deliver the mission in a different way. And that's what we are absolutely committed to do, achieving that stability at what is a very difficult time globally. Robert Peston.
Prime Minister, the former Tory Chancellor, Philip Hammond, has just said that you have totally trashed the Tory party's election-winning reputation for economic competence. Will you apologise to your party?
Well, I am determined to deliver on what I set out when I campaigned to be party leader. We need to have a high-growth economy, but we have to recognise that we are facing very difficult issues as a country. And it was right, in the national interest, that I made the decisions I've made today to restore that economic stability so we can deliver, first of all, helping people through this winter and next winter with their energy bills, but also making sure that our country is on the long-term footing for sustainable economic growth. Thank you very much, everybody.
Aren't you going to say sorry?
Abrupt questions, short answers. The Prime Minister, Liz Truss, Lizzie Bird and Guy Johnson back with us. Guy Johnson, your reaction, sir?
That was very short, wasn't it? She was basically asked the same question 3 times. Why should you continue in post as Prime Minister? And to be honest, she didn't look overly convincing in her answers. I think she is going to struggle. She has clearly put Jeremy Hunt in place in order maybe to provide cross-party unity. Whether or not that ultimately gets delivered, we will wait and see. But Liz Truss looks like she is rattled, would be my sense. She was looking around the room looking for people that didn't feel like a particularly slick performance, did it? She feels like she's rattled. She's just had to sack her Chancellor, one of her closest party friends within the Conservative Party. They've been very close for a very long time. They have been putting these plans together. She sacked the Chancellor. Does she ultimately need to go, I think, is the question that a lot of people are going to be asking after that performance.
You heard it asked in the news conference. Lizzie, she's got to come up with a better answer for this. Why is getting rid of the Chancellor in the national interest, but stepping down is not?
Yeah, Yeah, and what I heard from what she just said was that it's exactly the same vision, but it needs to be made palatable to markets to get it through. And that is why she's had to sack the Chancellor. There was more of an appeal to markets there, and a need to reassure markets. But I wonder whether markets will still want to be on board with the overall vision for Trussonomics, because at the heart of it, even though she's saying that she's now going to raise corporation tax, it's still Trussonomics. And it's stunning that she is going to raise corporation tax, because just reading from something she said at Prime Minister's Questions only on Wednesday, I feel it would be wrong in a time when we're trying to attract investment into our country and a time of global economic slowdown to be raising taxes. So, this is really undermining to herself. We have to wonder whether markets will buy it. And even if there was a little rally when we heard that Kwarteng was going to be replaced, and when there was going to be this U-turn on corporation tax, fundamentally, the economic credibility has been undermined. The BOE's had to step in. So is it too little, too late?
Well, I can tell you sterling rolling over here at 111.96. We're down about 1% on that currency pair, but read whatever you want into that, because cable's been all over the place in the last week. We've had lows of 103.50 just a couple of weeks ago. We were through 112 early this morning, through 113 even. Guy, I'm pleased that Lizzie turned to policy, so let's sit there on policy. There was a reversal in there. It was the planned freeze on corporation tax, a reversal on that. They were going to try and hike that maybe a couple of months ago. Now we got the backtrack. Guy, can you tell me if we're going to see a reversal on any other initiatives whatsoever? Because I just see one, the reversal on a planned freeze on the corporation tax. Where's the rest of it?
So if you're looking at balancing the budgets, corporation tax is one element of it. The NI cut as well, the national insurance cut, is obviously a huge other element to it. The top rate of tax was, from a fiscal point of view, largely irrelevant. It was a political blunder that they decided to get rid of that. So whether this goes far enough, we'll wait and watch. But if that's it, then this doesn't feel like a sort of wholesale reversal, as you say, as what Lizzie was saying, of what was originally announced. Does this go far enough? I think the market, I think you're right. The market is going to take a little while to judge what is happening here. And I think we need to hear from Jeremy Hunt. I don't know where Jeremy is, but we'll hopefully hear from him soon. I think he was sorting out Farnham Lane rather than sorting out the entire country. So I think we're in a position here where we need to hear from Jeremy Hunt. He was against, so what is interesting is that Jeremy Hunt was against raising corporation tax. He was in the camp when he was campaigning for the job of saying that actually what we need to do is cut corporation tax and raise other taxes. We've ended up with almost the exact reverse of that. So it's going to be interesting to see how he kind of manages that process. So I think at this point we need to wait. We've got the sacking of the Chancellor. We've got Truss coming out with a pretty unconvincing statement. I think we need to hear on the 31st or maybe earlier from Jeremy Hunt to get a full idea. I don't think they've got a fully thought out plan, John. I think that I said this earlier on in the day.
I agree with you.
This is not a fully formed plan at this point. They are making policy on the hoof. They've decided on corporation tax, but that's about it at this point. They have not got a fully thought out plan that they think will work, A, for the markets and B, for the parties.
So Lizzie, let's go there. And I know this is tough to answer, but the incoming Chancellor, Jeremy Hunt, we understand he's going to deliver the medium-term fiscal plan at the end of the month. As Guy said, October 31. Are we going to hear the budget that he would have delivered for, say, Sunak, or is this just a mix of both?
I think Guy's right to characterise Jeremy Hunt as somewhere between Truss and Sunak, and that's precisely why we're expecting she's picked him. To try and reach out to those other parts of the party. In his bid for leader, he said that cutting business taxes won't stoke inflation. Tackling inflation has to be the main challenge. So you can see where he sits there, but we don't know what he's going to be like as Chancellor really yet. If he's serving under Truss, he's going to have to, in a way, show that he is still delivering that vision. You heard in the press conference, the Telegraph was asking almost disappointedly, if you're going to make reversals, how do you still get to stay as Prime Minister? So there's this big wing of the Tory party that does actually want to see, the membership that voted for Truss wants to see her carrying out her tax-cutting vision.
Got to take a step back here, Guy, as well, and talk about what's happened with markets, something that may not have happened in the QE era. We've seen markets push back. Mohammed El-Arian was on the show with us earlier this week. He wrote it in a Bloomberg opinion column. The vigilantes are back. Guy, do you think we're going to see more of this?
Absolutely. I think the whole problem here was that we were in an environment where the market was clearly concerned about inflation, and that was blindingly obvious. To put a policy into place that only exacerbated that was going to get a very sharp reaction. And I think that politicians globally are now going to be aware of this, that they need to tread carefully. We are now back in the era where if you want to be reincarnated as being all-powerful, you come back as the bond market, because clearly we are now seeing that that is where the power now lies. The UK has been the first kind of example of this. There will almost certainly be others. I imagine the Meloni government in Italy is treading much more cautiously as a result of what is happening here. Other governments will be paying attention as well. Markets can move. Before we were moving markets, bond markets were moving in very small increments. There was very low volatility. But as we've now seen, you can get huge volatility events that can erupt very, very quickly.
Makes me think, Guy, just how much fiscal space we have to deal with issues going forward from here. One question that I've pondered, and Guy, I know you've done the same thing over the last few weeks. What surprised me more rather, is not the announcement by the British government, just the way this market responded to £45 billion worth of tax cuts. Now, Guy, you said it, your words. These were febrile markets. The timing was not great. But, Guy, I do wonder, we've got a big initiative coming out of Europe to try and offset some of the energy pain. We've still got a big initiative coming out of the UK as well. And these central banks, guys, you know, are still very, very keen on tightening up policy.
They are. But... and I think this is going to be the challenge for the Bank of England almost on Monday morning. How do you manage this when you have, as we've discussed, febrile markets? You've got markets that are super sensitive. Is QT going to be a policy that ultimately will have to be withdrawn in this kind of environment? Can you manage withdrawing the balance sheet, reducing the balance sheet in this kind of environment? Can you raise rates as aggressively? I think duration really matters here, John. I think it's over what period of time, and I think that's something that we've all got to try and figure out. How quickly do we want inflation to come back to targets? How quickly can we get inflation back down to target, 2%, circa 2%? And is the time period in which that needs to be managed longer than we originally conceived that it might be? Maybe you can do all of this, but maybe it will just take longer than you originally thought. We're seeing an awful lot of aggressive front loading at the moment. We're back to the kind of 1980s, certainly with the Fed policy that we're seeing, and others as well. Is that time frame simply too aggressive?
Yeah.
After the years and years of very, very low interest rates.
So, Guy, there's 2 points you're making here. One is, what is the appropriate time horizon to return inflation back towards target? Jean-Paul Van of BlackRock has written about that in the last few weeks. But I think the more important point here is, what is the nature of the shock, Guy? Is it a one-off shock, one winter, one war, inflation absolutely ripping, and then we go back to where we were before, perhaps in 12 months' time? Or is this a secular shift to higher rates, higher inflation? And are we seeing a permanent structural adjustment away from, say, sources of Russian energy? Now, Guy, if it is the latter, then you have to wonder how sustainable some of these policy efforts are coming from these governments right now.
I think I've heard you talking about this throughout the day. There is a large argument that says that we are going into a new paradigm, that we are not going to simply return to the low volatility environment we had before that effectively was suppressed by central banks. I think that's going to be incredibly difficult to achieve. There are lots of structural forces, I think, on the move at the moment, John. You've got deglobalization, you've got the energy story, you've got an energy story that's going to take longer to sort out maybe than a lot of people think at this point. Moving to a lower carbon energy sort of plan is going to take maybe decades. It's certainly not going to be achieved overnight. We're changing our policy with regards to China, and it's interesting to see where the UK sits in all of this. So all of this is incredibly structurally, you would have thought, inflationary. So it's going to be much more difficult for central banks to operate with that very low environment, low rate environment. I don't think we're going back there. I think the environment looks to be very different going forward. and I don't think it's just one source of change that we're seeing here at the moment. There are multiple points of change. And I think that's going to make it very difficult for markets to navigate this and to fully understand ultimately what that means for policy. I think policymakers are still trying to figure this out as well. I don't think they've got a rule book or an understanding of ultimately how they are going to respond. So again, we're going to see volatility in policy as a result.
I think we're all struggling with this one. Lizzie, I want to give you the final word. Where this leaves Governor Bailey Monday morning after this gilt market operation ends today.
Well, I think Andrew Bailey's got to be creative here. I was speaking to former BOE policymaker Martin Wheel about what he could possibly do. He suggested targeted support for pension funds that need the help. But Andrew Bailey needs to get out of this situation where he's beholden to fiscal policy and prioritising financial stability over inflation fighting. He knows that. The IMF's told him that. I think if the market volatility continues on Monday, he'll be looking for something other than the blunt tool of QE.
Hey, Lizzie, fantastic work today. Lizzie Burden, Guy Johnson. Guy, I know you'll pick things up in about 7 minutes' time. Looking forward to that. Guy Johnson there and Lizzie Burden. Chancellor Kwarteng is out. Jeremy Hunt is in. Can Liz Truss hold on? From New York, this is Bloomberg.
Most of us don't spend much time thinking about the grid, the dizzyingly huge system of cables, transformers and outlets that reliably powers our lives. It's an easily ignored, change-resistant part of the modern world, and that's the way we like it. But as we move towards less planet-melting ways of producing electricity, the grid is going to have to evolve too.
We're seeing so many countries and governments announcing high targets when it comes to decarbonization and being climate neutral. But this is just one side of the coin. It's not enough to simply generate green energy. We also need to make sure that this is transmitted and distributed to the end consumers.
The grid of today just isn't equipped for renewables. So a new kind of grid is starting to take shape. The supergrid.
James Gorman of Morgan Stanley moments ago said the environment was difficult, but we're not stressed. I wonder if you feel the same way. Equities right now just about positive on the S&P, up a third of 1%. That's the price action. Here's your trading diary. The UMich Consumer Sentiment Survey at the top of the hour. More Fed speak, George Cook, Waller, all on the agenda. Plus President Biden discussing US inflation at 6 p.m. Eastern Time. Fed President Jim Bullard speaking from the IMF on Saturday, followed by Kashkari next week. And finally, more bank earnings to kick off Monday morning. From New York City, thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one, and through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi-Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, Pepsi goons bomb their own trucks. And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning 1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
when the news of the